Good morning, people. How are you all? Please do let me know if there is any problem in the way you can hear me or where you can see me. That will help me correct it. And I'm rightly available on the live chat on my phone screen. So if in case you have anything to tell me which you can't tell it live to me, you can tell it on the live chat and definitely be looking at it every what time. Like every minute, I'll just stare at my phone for a while to check if you have sent any messages, and I'll definitely consider and then answer those questions for you if there is any. So, as I told you previously, once again, good morning. So we're on day 2 in our CA Foundation crash course, and once again, welcome to Yash's Academy. So in our yesterday's discussion, we did chapter 1 theoretical framework, chapter 2 rectification of errors along with accounting process, chapter 3 BRS is where we stopped our yesterday's class. So what will we do today? We'll continue from where we left yesterday. So hope things are great from your side, and it's been great from my side as well. I think you received this PDF last night. I hope you have downloaded it on from your Telegram or WhatsApp channel, and you're basically going through the same along with me right now. But right now, I'll run you through it. I'll share the screen, so I'll be showing it to you. So you need not be really worried about it. But otherwise, as per your request, the file is being made available to you. Okay. All this is something that we've done yesterday. We've done the basics of accounting, accounting cycle, accounting policies, then capital and revenue items distinction. And I clearly mentioned yesterday as to what are the important topics that you guys should be doing from your end. And I mentioned them very clearly what exactly are the type of difference between questions and what exactly are the characteristic features, advantage, disadvantage questions. So I hope you people have been doing it from your end because it's pretty important. I can only tell at the end of the day. It's left to you whether you'd have to do it or not. So a man can only take the horse till the water, but it's left to the horse whether it has to drink the water or not. Only thing that I can do is I can add little salt to your grass so that you feel thirsty and then you have it. But still, I can't pour the water into your mouth. At the end of the day, it's you who will drink it. So I've been doing my sided efforts to add that salt to your what do you say grass so that you people will feel thirsty by adding up whatever sort of questions possible. But at the end of the day, it's still in your hand. So I hope you people are drinking water. So we did all this. We did all of this. Yes. Here it is. So we'd have to do. We did this first question yesterday in BRS. That's our question number 6. But we didn't do question number 7. Am I right? We didn't do question number 7. So what will we do now is basically we'll in this question number 6 now we did a basic BRS problem. We never discussed that concept of timing differences and non-timing differences. That's another important aspect that we would have to discuss. Now, whenever we analyze the differences in a bank reconciliation statement, whenever we analyze the differences in a bank reconciliation statement, that is the difference between screen is not visible clearly. Yes. We'll solve one more problem. Yes, Aditya, we'll solve one more. Yeah. And even with regard to this, on in BRS particular topic, no, what we did yesterday was only what to say normal bank reconciliation statement. Did you ever discuss about timing difference, non-timing difference? No, we really didn't. Now, for instance, I have a mild cough and cold. I have a mild cough and cold. Now, this mild cough and cold, whatever I have today, will it be there tomorrow? It will not be there tomorrow. Or even if it is there tomorrow, in 2-3 days it will be fine and I'll be completely normal. I have a mild fever. Will this fever exist for more than 2-3 days? No, maximum 2 days or 3 days. Beyond that, my immunity power will fight it and I'll be completely fine another 2-3 days. Another way, if I have any disease which is not curable, can there be few diseases which is not cured by time? Maybe just assume that I have a small hole in my heart. Now, will that hole be there tomorrow? Yes, it would be. Will that hole in the heart be there after a week? Yes, it would be. Will that hole in the heart be there after a year? Probably the hole would still exist, but I would not exist, isn't it? So the diseases that we get can be categorized into two categories. One is those diseases which can be cured by time. Second, those diseases which cannot be cured by time. Some diseases, just the time will cure it. Just give it some time and your body will fight it and then you'll be fine. However, there are certain diseases which cannot be cured by time. You would have to take an external action on these. Only when you take an external action on this, these diseases will get cured. Do you guys get it? Similarly, these differences that will arise between the passbook and the cash book, not all the differences will cure by time. Some differences you need not do anything; it will automatically get cured. What is the instance? The example is pretty easy, guys. Now, whenever there is like checks issued but not deposited, or checks deposited but not cleared, what is it that you have to do? You just have to sit there and then pray to God. But how to say chant Hanuman Chalisa on repeat? Nothing is that you can do. The banker will clear it. It's just a matter of time. You guys get that? But however, if there are differences like bank charges not recorded, or if there are differences like bank interest not recorded in cash book, so these are errors. These are errors. These are not mere differences. These are errors. Till the time you rectify these errors, the difference would continue existing. The difference would continue to be there throughout. So it is your responsibility to rectify this. It is your responsibility to rectify this. So the thumb rule, what I'm trying to tell is, the differences whatever is there, we write it in BRS. Not all of them are just differences. Few of them are errors. And whenever it's an error, you would have to rectify. If I do a mistake, I am happy to rectify it. If you do a mistake, you should be happy to rectify. Similarly, if the business has done mistakes in cash book, they would have to rectify. They would have to amend. They would have to adjust themselves. I repeat, the differences that can be categorized, differences that will be there between cash book and passbook can be categorized into two categories. Number one, differences which are timing, differences which are not timing. Number one is timing, number two is non timing. What do we do with regard to timing differences? Timing differences would continue to be appearing in your BRS. Non-timing differences are differences not because of time. These are errors and they have to be rectified. Now what I will do is I'll take you to the Excel sheet that we had yesterday, wherein we solved that problem. Okay, this is exactly where we solved this yesterday's problem. Am I right? Now these differences whatever are there, you would have to categorize these into timing and non-timing differences. Shall I help you categorize these differences into timing and non-timing? Now come on, have a look. Let's read each of them. The debit side of cash book was undercast by 400. Now this is clearly an error. This is clearly an error. So I will write here this particular thing, whatever is there, this is an error. So meaning non, this was one, isn't it? Non timing difference. This is a non-timing difference. This is a non-timing difference. Why? It is an error. If there is an error in cash book, it is non-timing difference. If you want a clear understanding of timing and non-timing, I'll make a quick note here. Differences, timing differences, non-timing differences. What are timing differences? Checks issued but not cleared. Checks deposited but not cleared. These are timing differences. What are non-timing differences? They have nothing to do with time. Even by time, no, these will not get rectified. You would have to rectify them. Example, direct deposit by customer into bank account. Don't ever write small a, okay? It's always capital A, capital C. Account short form. Direct deposit by customer into bank account is an instance. Then bank charges not recorded in cash book, or bank interest not recorded in cash book. This is another example. Then if there are any errors in cash book. See, whenever there are errors, see, all these three are also errors only. The error of omission, or if there is a entry made at wrong amount, like error of commission or something. Again, if there, even if there is a principal error or something, if it is a wrong, if it is an error in the cash book, we would have to rectify. These are non-timing differences. If there is an error in passbook, can you go to the banker and then say, hey banker, you've done mistake in your books, can I enter into your books and then make the rectification? They'll slap you. You cannot make the entries in the banker's book. In the banker's book, only the bankers can do the entry. You can do entry only in your books. So what is it that you would have to? You have to do just waiting for the banker to correct it. Done. So you are not Ashman Kurana to go to Yes Bank and then say, can you do double entry into your accounting package? No, you can't do that. You can't do that. And the banker there is not Yamini Gupta. So what is it that you do? You just sit and wait for the banker to correct it. When you sit and wait, you are not doing rectification. Here the rectification has to be happening from the banker's end. So you do nothing. So what about timing differences? Timing differences will appear in BRS only. They will continue to appear in bank reconciliation statement only. What about non-timing differences? To be adjusted against cash book. To be adjusted against cash book. In where? In preparation of amended cash book. There's another name to this. I don't know what name have you heard it all these years from. Adjusted cash book. So it can either be called as amended cash book or it can also be called as adjusted cash book. Sir, which is correct? Both are correct only, sir. It is the same thing. Sir, I want to call it amended cash book. Call. Who's stopping you? Oh, did I tell you? You have to call it like this only because I am telling. No. I'm telling you very clearly. It can either be called as amended cash book or it can be called as adjusted cash book also. Yeah. I want you to quickly make a note of these items. Whatever we've just written. Make a note in your notebook. Make a note. Make a note. If you want, click a small screenshot. Chandan is asking, can we write BRS in the form of debit credit? No, beta. Bank reconciliation statement. It's a statement. It is not an account. So you can't write debit credit. You'd have to write it at less only. Answer might still be correct, but you cannot. Okay. Pooja, I've shared the file. You guys can have a look. Those of you who are not able to find me clear or the screen not very clear, check, go to video quality and check it. It might be 144 pixels or 240 pixels. Increase it to 1080 pixels. YouTube by default has reduced the pixels or video quality for all the mobile phones. So if you're watching it on mobile phone, go to that settings button that's there, three dots on the right side of your screen, and then change your video settings, video quality to 1080 pixel or 720 pixel, considering the amount of data that's available on your phone, and you will be able to see me very clearly. Okay, guys. So that's with respect to this part differences. I hope you made a note. If not, you can always come back and then watch this part. Okay. Now, with respect to this question, let's identify each of them and then call them whether timing or not timing. Okay. So what was the first one? The first difference was debit side was undercasted. It's clearly an error in cash book. Am I right? So it is a non-timing difference. Next one. A check of rupees 1600 in favor of Y suppliers limited was omitted by the bank from the statement. You get that? So who has omitted it? Bank. By the bank from the statement. The check was debited to another customer's account. So this is a mistake from whose side? The banker side. So would you have to do something? Yeah, I told you are not Ayushman Kurana and the banker is not Yamini Gupta. You cannot go talk to them the way you want. You have to wait till they correct their error. Okay, so what is this? This is timing difference. Why is it timing difference? This is timing difference because it's an error in passbook. If it is an error in passbook, it is timing difference. If it is an error in passbook, it is if it is an error in passbook, what is it? It is timing difference. Okay. The file is already there in the Telegram and I've pinned it so that people don't miss it. I've shared it in I'm in two Telegram groups and I've shared it in both of them. Okay, done. We'll go to the next one. So the third one, a check of rupees 172 drawn for payment of telephone bill was recorded in cash book as 127. So how much did you withdraw? 172. How much did you record? 127. Where is the error? In the cash book. Where is the error? In the cash book. So when there is an error in the cash book, what is it that we would have to do? See, error in the cash book, non-timing difference. It is non-timing difference. So I will write number 3. Hey, I've told this to you yesterday and I'm repeating it to you today. In this BRS, when we write this 1, 2, 3, 4, 5, 6, 7, 8, 9, you would not be writing just these numbers in the examination. You would have to write the description. I mentioned it to you yesterday. If you want, I can actually type it, but it will take additional minute. You guys told, no, sir, we are smart enough. We get this. You don't have to take that pain of typing it. We will write it. Now what you do next to the difference, you just make a note, NTD, non-timing difference, or TD, timing difference. Okay. You will not be writing 1, 2, 3, 4 numbers. You have to write that description. Whatever the statement is there, a short form of the statement has to be written in BRS. Okay, please note, don't forget. We're going to the fourth one now. A check of rupees 425 from Mr. Paul paid into the bank was dishonored and shown as such on the bank statement, although no entry was made in the cash book. So, should you enter in the cash book? The answer is hell yes, you have to. But what have you done? You are busy watching memes that you forgot to enter it in cash book. dishonored, no, you're feeling bad, you are crying. Do you remember I told yesterday? So because you are crying, you forgot to enter it in your cash book. What is it that we'll do now? We'll enter it in our cash book. But it is a non-timing difference. Don't forget that. So fourth one is non-timing difference. Okay, guys, come on. Let us go to fifth one. A bank had debited a check of rupees 150 to Mr. Hari's account by mistake. It should have been debited to Mr. Kar's account. So some other person by name Mr. Kar has issued a check. They were supposed to debit his account, but banker has wrongly debited Mr. Hari, our client account. So it's a mistake from the banker's side. Am I right? So it's an error in passbook. Timing or non-timing? Have a look. Error in passbook is timing difference. So fifth one is timing difference. What do we do with timing differences? Timing differences will continue to appear in BRS. What about non-timing differences? They would go to adjusted cash book or amended cash book. Come on, fifth one over. Let us go to sixth one. Dividend of rupees 100 was collected by the bank but not entered in cash book. Okay. When you receive dividend, the banker has collected on your behalf. That doesn't mean only banker will record. You would have to record it in your cash book. Am I right? In your bank column. But you haven't. Because you haven't recorded in your cash book, it is an error. Error of complete omission. What is it that we would have to do? We would have to enter it. What error is it? Timing. What difference is it? Timing or non-timing? This is definitely a non-timing difference. What difference is this? Non-timing difference. Sixth one is non-timing difference. Okay, non-timing difference. Sixth one done. Let's go to seventh one. Checks totaling to 1,300 drawn on November was not presented for payment. So you have drawn the checks and it is not presented for payment. So what exactly is this? Drawn in the sense you put the signature and issued the checks, but those have been not yet presented to the bank for payment. So this is timing difference. You don't have to do anything. Just wait for another 1 week or 10 days. Those checks will go to the bank and those checks will get cleared. So number 7 is timing difference. Do you agree with me? Number 7 is timing difference. Checks issued but not cleared. You don't trust me? I will show it to you. See, I had written here. Checks issued but not presented is timing difference. Checks issued but not cleared, or checks deposited but not cleared. Basically not presented for payment or cleared. Yeah, what is it? It's obviously a timing difference. Anything that you guys have to tell? Yeah, Niraj, obviously you can't talk to me. Okay, then next one. So we have uh, number 8. Check of rupees 1,200 deposited on 30th of November was not credited by the bank. So you have deposited a check, banker has not credited it. Whose mistake? Banker's mistake. Who will rectify? Banker will rectify. What is it that you have to do? You would have to just sit, relax, and then chill. Okay, number 8 is timing difference. Number 8 is timing difference. Number 8 is timing difference. Okay, guys, understood? Now I'll take you to the ninth one, last one. Interest amounting to rupees 300 was debited. Banker has charged interest for your bank overdraft. Such interest is an expense, but it is recorded only in the passbook. What is it? It has been completely ignored from entering in the cash book. It is yet to be entered. So till the time you don't enter, it's an error of omission. You would have to rectify. And I've told you, when there is an error in the cash book, it is non-timing difference. So the last one, ninth one is non-timing difference. If you don't pass that entry, no, your bank balance as per passbook and bank balance as per cash book will never tally. The difference will always be there. You get that? So it's non-timing difference. Get that? So that's it. So what did I do now? I analyzed the difference into timing and non-timing. Why did we do the analysis? Because I told you clearly that timing differences will appear in bank reconciliation statement. However, non-timing differences will go to amended cash book. Now, this bank reconciliation statement, whatever is there here, no, this is before amended cash book. This is before amended cash book. Now, what is it that I'll do? I'll prepare an amended cash book. Have a look. Okay, what am I trying to prepare now? I'm trying to prepare an amended cash book. Only one column. Okay, you need not prepare discount column and everything. Just one column. Bank column only is sufficient. Sir, but single column cash book means cash column. In this case, it is only bank column. Hanga, sir. Yeah, Hangin. Sir, can I write particulars amount, particulars amount? I have discussed this yesterday. You can. But when you write particulars amount, what exactly should you be writing? You would have to be definitely writing debit and credit. But when you write receipts and payments, it's actually not necessary. But I want to write, sir. Right. Sir, I want to write amended cash book as the heading, but I want to write particulars amount, particulars amount. Right? Who's stopping you? If there's anything, please drop a message in the live chat. I'm seeing it quite often. Okay, perfect. Now, have a look. What are the items that will appear in amended cash book? Amended cash book will only have non-timing differences. Non-timing differences. Why? Non-timing differences are errors and they have to be rectified. Okay. How much is the opening balance? Bank balance as per cash book is 4,480. But what you need to cautiously see, yes, Aditya, they have not asked us to do it in the question, but I'm still doing it for the purpose of knowledge. Yeah. Will you do it in the exam if they have not asked? In the exam, you do it only if they ask for it. I'm doing it extra. Yeah, guys, whoever is finding the screen to be blur, you would have to check your video quality. Go to the in your phone menu. There is 3 dots on the right side. Tap on that. Go to video quality. Change it from 144 pixels or 240 pixels. Keep it as higher as possible. 720, 840, 1080. You higher the pixels you keep, better will be the clarity. Okay. It's a liability, guys. Bank overdraft. So the balance will come on the payment side or the credit side. Balance brought down. Okay, how much is the balance? 4,480. This balance has been taken care of. This is there, no? This has been done. Okay, done. Would I have to make it different color? Okay, that is taken. Next, what are the things that I should take in this amended cash book? I would have to take non-timing differences. So I would have to take this one. Then I would have to take this one. Next in, I would have to take these two here. And I would have to take this last one. Those are non-timing differences. So what about timing differences? They would continue to appear in BRS. Okay, these many items. So you would have to write add items will be receipts. Add items will be receipts and less items will be payments. Less because the payment, add because it's a receipt. It's coming in. So 1 and 6 are add items. So I'll write 2, 1. I've written here 1. You would have to basically write the description of 1. Okay, you get that? That is undercasting of what I say the cash book now corrected. That's what I'll write. See, have a look. What was 1? The 1 was basically debit side of the cash book was undercasted. So what are we doing now? We're recording it now. Done. So you'd have to write that part. It will become 400. Then what else do we have? Then there's one more add item. What's the other add item? Non-timing difference. So I'll write here 2. Haven't they mentioned its overdraft? They've given it, Aditya. You'd have to read the question little carefully. Have a look here. On 30th of November 2018, cash book of Mr. Hari showed an overdrawn position. It has been mentioned. It's been mentioned. It's overdrawn position. Aditya, you get that? Papa, he'll realize now. Overdrawn position. Okay. Now how much is this? This is 100 rupees. Okay. Next, favorable items, whatever are there. What to say? Add items which are timing differences. They would appear in your amended cash book. Now we have less items. Less items are basically payments. Am I right? Okay. What will I write? 45, 425 and 300. 3, 4 and 9. I'll write here. By third one. What is the amount? 45. By fourth one. How much is it? 425. 425. Next one we have by ninth one 300. 300. That's it. Now check the total on this side is equal to sum. So we posted everything from the BRS which are relating to non-timing differences. So I'll write the totals here. 5250 here and how much? 500 here. So the difference is balance carried on. What is it? I'll write here by 2 balance carried on. So this is the corrected balance. What is this? Corrected balance. Now tell me how much do I get here? I'll get 5250 minus 500. I'll get 4750. This exactly is the balance as per amended cash book. Now, what exactly is the balance as per amended cash book? The balance as per amended cash book is 4750. This is important, guys. This is important. Now, when I prepare, what is it? BRS after amended cash book. In that case, the starting point would be balance as per amended cash book. When I prepare BRS after amended cash book, my starting point would be balance as per amended cash book. Now I'll show. Have a look. Okay, that is BRS before amended cash book. Now right below, I'm going to prepare BRS after amended cash book. So what is this going to be? BRS after amended cash book. After. What will be the balance as per cash book? It will not be balance as per cash book. It will be balance as per amended cash book. Very important. Note this point. Okay, it will not be minus 4480. It will be minus 4750. Sir, how did you get minus 4750? 4750 I got it from amended cash book. Have a look at amended cash book. How much is the balance? Minus 4750. So I can in fact write minus and select this box. I'll get minus 4750. Get that? And what are the items that will be removed here? These non-timing differences will be removed. Why? Non-timing differences will not appear in amended cash book. Non-timing differences will only appear in where? It will only appear in amended, I would say adjusted cash book. So I'll remove this and then I'll remove this also. You guys get that? Now I'll remove these two. Why? These are again non-timing differences. Delete. I'll delete this line also. Why? Again, it is non-timing differences which has already been adjusted in adjusted or amended cash book. Now I have to find the total here. Have a look. Is equal to sum of these two. How much is this? Now the moment I do this, 4750 plus 2900 minus 4750 plus 2900 and then minus 1350. Okay, wait. Yeah, how much do I get? 3200 is what I get. Have a look. Have a look. How much do I have here? How much do you have here? 3200. How much have I got here? 3200. That is balance as per passbook is minus 3200 or overdraft balance as per passbook is 3200. That's how we do it. Okay. Okay. Again, people have been asking, so I'm repeating this to you. They have not asked us to do amended cash book in this question. Have they asked us to do? No, they haven't. Sir, then why did you do it? I did it to show you how it is done if it is asked. I'm just showing it to you how it is done if it is asked. You have to prepare for the worst. What if they ask in the exam? How do you do it there? That's what I'm trying to show it to you here. Okay, guys. So this is for you, the entire answer in one shot. I will show each of it for 10 seconds so that if you want, you can take a screenshot. This is your bank reconciliation statement before amended cash book. This is what we did yesterday. Bank reconciliation statement before amended cash book. And this is our amended cash book. This is our amended cash book. This is your amended cash book. I hope you've taken a screenshot if you want to. Or you can always come back and watch this lecture. This lecture will be there on the YouTube for time to come. And this bank reconciliation statement after amended cash book. You're asking me, okay, Amar is asking, sir, why is it minus 4,150? It's pretty simple. It is after amended cash book. What is this? This bank reconciliation statement after amended cash book. When you prepare a bank reconciliation statement after amended cash book, the differences have reduced because all the non-timing differences have been adjusted in the cash book. So we would have to start not with the cash book balance, but we would have to start with balance as per amended cash book. We would have to start with balance as per amended cash book. Do you get it, Amar? Yes. If there is any other query, please drop it to me. I'll definitely consider. Okay. There is a little lag, meaning whatever I tell, you hear it after some 5-6 seconds. Okay, in this live session. So you guys drop a message and then tell me, do you want me to do the next question on bank reconciliation statement? Do you want me to do one more question, or should we go to the next topic? It's your call. Two ways of doing it. Number one, I can solve this right now here, or number two, I can give this to you people as homework, and then if you have any doubts, I can take it in tomorrow's class. So two ways of doing it. If you want, I can do one more problem, that this problem on BRS. Just drop a message, let me know. They can ask you to prepare amended cash book and BRS after amended cash book only. They can also ask you to prepare BRS before amended cash book and BRS after amended cash book. All three also possible. But whenever they ask you to prepare amended cash book and BRS, number of adjustments will be less because the syllabus has lot of other topics. They can't give you 15 marks, 20 marks from only one topic. You get that? Oh, I'm getting mixed opinions. Next topic. One more, Tejaswini. Do it, Sarji. One more. Okay. One more news that I had to share with you people, but I didn't tell you till now. Um, Actually speaking, the crash course was scheduled to be 3 days, isn't it? Day one was yesterday, today is day two, and it was supposed to end tomorrow. But we're extending it by another day. So today is day two, that is Tuesday. We'll have it on Wednesday, that is tomorrow, as well as Thursday. So we have one day extra, so that we'll do every topic, and we're not going to skip any topic. So come on, as people have asked me to do it, I'll do question number 7 as well. Okay, let us do question number 7. So I'm solving question number 7. But after I do question number 7, I will leave that question with you people, and I want you people to do that and tell me what are the timing differences, what are the non-timing differences. Huh? Will you do that? That will be your homework. Okay, I think now we have sufficient space. Come on, let's get started. The cash book of Messrs. ABC shows 27,570 as the bank balance as of 31st of March 2017. But this does not agree with the balance as per the bank statement. Obviously, it's not agreeing. That's the reason we're preparing bank reconciliation statement. They've given the differences. So let's start. So what is our starting point? Cash book. How much? 27,570. So bank balance as per cash book, 27,570. Perfect. So let's read the differences. The first one, subsidy of rupees 10,250 received from the government directly by the bank. So in order to promote your business, in order to ensure that you do well, for this MSME and all, they're reducing the interest, they're giving some money. So the government has given 10,250 rupees to you. They've not given it to you as cash. What they've done is government has deposited the money in your bank account. So what has happened? Your bank balance has increased. But do you have a responsibility to record it in your cash book? Obviously yes. But have you recorded it? The answer is no, you haven't. So what has happened here? 10,250 has hit your bank account, which has increased your passbook balance, but the entry is not yet made in your cash book. So bank balance as per passbook has increased, bank balance as per cash book has not. Where are we making changes? Cash book. Can you see the P? In order to see the P, either you'd have to P down or you'd have to C up. What's in your control? C. What do you do? C up. C up. Meaning basically add. How much? 10,250. So I'll write here. Shall I write one or do you have to write the entire description? We'll save little time. You guys would have to write the same description what's there. We need not write completely such long sentence. Just write subsidy. Okay. For instance, if you want to write subsidy received not recorded in cash book. This is the kind of expression that you will write. Okay, guys. It will be the same. Someone's asking, sir, can you do a problem with starting balance as per passbook? Now, if this was balance as per passbook, what has happened? The entry is made in passbook, entry is not made in cash book. Because we're starting with cash book, we're adding. If you were starting with passbook, we will deduct. If we're starting with passbook, we deduct. Only the change will be add items will become less and less will become add. That's the only difference. You get that, Tejas? Okay. Neeraj, it will be the same beta. It's like this. If you would have start with passbook, you would have to deduct. If you start with cash book, you would have to add. What you do is at the end of the day, you solve a problem and I'm there. And I'm there. You guys can get back to me if you have any doubt with any particular adjustment or any problem. Done. I'm taking the next problem to next adjustment. It says on 15th of March 2017, the payment side of cash book was undercasted. Payments are undercasted. When you reduce the payment, what will happen? The cash book balance will increase. Now I have paid 400 rupees, but I've recorded as paid 350. Now assume that I have 1000 rupees in my pocket. How much do I have? 1000. If I write 400 as payment, I'll be left with 600. Assume I have 1000 rupees in my pocket. If I pay 400, for 600 will be left. If I write it as 350, I'll have 650. So when you decrease the payment, cash balance will increase. So they've undercasted the payment side. So what has happened? Bank balance as per cash book has shot up. Bank balance as per cash book has increased. Can you see the P? No. In order to see the P, either you would have to P up or you would have to C down. What's in your control? C. What do you do? C down. So you would have to reduce 350. Less item. Payment side of cash book undercasted. How much? 350 rupees. Correct, Sumant. Everything will be reversed in the cash book. If we start with passbook balance, 350 done. Let's go to third one. On 20th of March 2017, the debit balance of the of rupees 2156 on the previous day was brought forward as credit balance in cash book. So you've done this mistake. So you had a debit balance of 2156. So you had a positive balance of 2156. You wrongly taken it as credit balance. So you would have to double the rectification. See, it's like this. You add plus 10 rupees. You record it as minus 10. So in order to rectify, now you would have to add 20 rupees. You get that? You would have to go right side 10 kilometers. By mistake, you've gone left side 10 kilometers. In order to rectify from that wrong place, you would have to take a right turn and then go 20 kilometers. I'll repeat. You would have to go right side 10 kilometers. By mistake, you've gone left side 10 kilometers. So from this wrong place on the left side, to go to the right place, you would have to take right turn and then go 20 kilometers in the opposite direction. Similarly, you had to record debit 2156. You have wrongly recorded as credit 2156. 156. So now you would have to debit 2156 plus 2156. So 4312 rupees has to be debited now. You get that? Debit in the sense add. So third one. Debit balance wrongly recorded as trade balance 4,312. How did I get 4,312? It is 2,156 into 2. I hope you got that point. Why am I doing it double? Did you guys get it? Why am I doing it double? 4,312. If you haven't, just drop a message. Okay, done. Third one done. We'll go to fourth one. A customer of Messer CBC who received a cash discount of 5% on his account, 2000, paid to Messer CBC a check on 24th of 2017. The cashier erroneously entered the gross amount in the cash book. Okay. Now, there is a customer of ours, ABC and Company, Messrs. ABC. They're supposed to pay 2000 to us. When they're paying 2000 to us, we're giving them discount of 5%. If we give discount of 5%, it becomes 1900. How much will it become? 1900. So 1900 rupees is to be written in the bank column. 100 has to be written in the discount column. Now, what is this gross amount? Gross means more. Net means after deduction. Gross means more, net means after deduction. So gross amount is 2000. After deducting interest of 100, net amount is 1900. You would have to be writing 1900 in the bank column. So what is the correct amount? 1900 in the bank column. What about 100? 100 in the discount column. What have they done? They have wrongly recorded entire 2000 in the bank column. You get that? But how much did you receive? 2000. Receipt 2000. Sorry, receipt 1900. Wrongly recorded 2000. So what has happened? Passbook में receipt is 1900. Cash book में receipt has been recorded as 2000. You increase the receipt by 100, which you didn't receive. Discount you won't receive, no? That discount money you assumed it to be received. So your cash book balance has gone up. Can you see the P? No. In order to see the P, either you have to C down or P up. What's in your control? C, cash book. What will you do? Bring it down or less. How much? 100. This is with respect to fourth one. Your discount. Allowed or received? It's allowed. Wrongly in bank column. You wrongly recording bank column. మనస్లాయో how much? ఎతరకిటి 2000 into 5%. That is 2000 into 5% is only 100 rupees. You understood everyone in the chat? మనస్లాయో 100. Next. Hey, because you people would have that small confusion what to write in the description, I'm writing it for you. You would write something like this. Need not be exactly the same. You need not mug that, guys. Fifth one. On 10th of March 2017, a bill of rupees. Okay, you want me to tell the fourth one again? Huh. It's simple. It's simple. It's simple, Charan. You have received 1900 rupees because you allowed discount of 100 rupees. So how did you get 1900? 2000 minus 5%. But what have you done? You wrongly recorded 2000. So the receipt has been wrongly increased by 100. Cash book may receipt has been wrongly increased by 100. So what is it that you should do? You're making changes in cash book, you would have to reduce that 100. Okay, Charan, Charu. I hope you understood. Okay, next. After that, we have on 10th of March 2017, a bill for rupees 5,700 were discounted from the bank, entered in the cash book. Okay, but proceeds credited in the bank amounted to 5,500. So, how much did you discount a bill for? 5,700. Bill for rupees 5,700 was discounted from the bank, entered in the cash book. Okay, but credit in the bank statement is only you have wrongly recorded 5,700 in your cash book, but passbook increased only by 5,500. 200 rupees was not increased in your passbook balance. Why? Maybe because the 200 is the banker's charges. So the cash book has increased by 200, passbook has not. Where are we making changes? Cash book. What is it that I have to do? Decrease. By how much? 200. Okay, which is this? This is the fifth one. Less item. We have to write the same thing. If you want to drop a message, I'll type it. I thought I'll save just a little time and I decided not to type the description. It's a less item. I hope everyone's understood it so far. Come on, let us go to sixth one. A check issued amounting to 1,725. Returned marked out of date. Okay, you issued a check. When you issued a check, what happened? Cash book balance reduced. But the passbook balance didn't reduce. Why? Maybe it because of technical error, or they're calling that check to be out of date and they're receiving that check. They gave that check back to the customer. The customer gave that check back to you. So has it reduced the passbook balance? The answer is no. The check has not reduced the passbook balance. When you issued the check, your cash book has gone down. The banker has not cleared the check. Passbook balance is not reduced. Can you see the P? No. In order to see the P, either you'd have to see up or you'd have to P down. What's in your control? C. What will we do? Add. What will we do? Add. So I would treat this as an add item. Fifth one over is sixth one. What is this? Sixth one. Check received mark. Okay, check. What is the amount? 1700. 1725. 1725. Okay, come on. Let us go to seventh one. Insurance premium of 756 paid directly by bank on standing order. So you have a lot of payments to do. You are a very rich guy. You don't have time only. You have to do the Toma, Go, Tula, and all. So what have you done? You basically asked your banker, pay the money on my behalf. Yeah. When you walk out of the bank, background that scam 1982 background and all tune is on is coming. You're like very rich now. So what is it that's happening? You ask the banker, you make my payments, man. Don't even ask me. So the banker has made the payment. When the banker has made the payment, what has happened? Your bank balance as per cash passbook has reduced. Cash book balance has not reduced. Your bank balance as per passbook has reduced. Bank balance as per cash book has not reduced. Where are we making changes? Cash book. What is it that I would have to do? I would have to decrease it. So it's a less item. So shall I write it? Seventh one. Less item. Insurance. Standing instruction. What's the amount? The amount is 756. 756. Okay. Lalit, this is the speed that we can go. If you'd have to go faster than this, how do I do? You tell me. You'd have to just tell the answer and then go ahead. That case, I would not be solving. I'd have to be just showing the PDF to you with the answer and then scroll ahead. Yeah. Bills receivable of rupees 1530 discounted for rupees 1500 with the bank had been dishonored. Oh, what has happened? A bill has been dishonored. When a bill has been discounted, bank balances per cash book, passbook, both have increased. When it is dishonored, balances per passbook has reduced. But they've not entered it in cash book because the advice was received after 30th of March. I repeat, a bill was discounted, balances per cash book, passbook both increased. Then what has happened? The bill was dishonored, so the banker decreased the passbook balance. But the advice or this information was given to the customer only in the next month. So banker has not, I would say you have not decreased in your cash book balance. So cash book balance is more. What is it that you have to do now? You would have to reduce it. By how much? 1530. Less item. Bill dishonored, not recorded in cash book. What's the amount? 1530. Okay, 1530. We're done with this one. Next. That's it. Bank recorded a cash deposit of 1550 or 1505. There is a cash deposit. When the cash deposit was made, cash book increased by 1550, passbook increased by 1505. So there is an error in the passbook. So can you see the P? No. In order to see the P, they would have to reduce the C. By how much? 1550 minus 1505. 45 rupees you would have to reduce. So last one. Wrongly recorded in passbook. What is the amount? 45. That's it. We're done. Okay, what is the total now? We get 1627. You get 2981 here. So what is it you have to do here? Total of it, and the answer balances per passbook will be 40,876. This is the answer, and you guys can try sorting out these differences into timing, non-timing, and then also prepare amended cash book and bank reconciliation statement after amended cash book. So that's with regard to this topic. Okay, shall we go to the next one, guys? And one more important point that you guys need to notice: this is not a mutual fund ad, and I'm a human being. I can't increase my speed to X. Solving the problem takes its own time. Yeah, I can reduce the explanation if you want. Okay, but that might trigger a doubt, and then I would have to explain it second time, third time. Instead, let's do it once. Yes, I do understand that there is a little bit of difference. Like few of you are fast, few of you are slow. That happens. That happens in every class. Yeah. Okay, we're going to the next topic now. We're doing the next topic, that is chapter 4, valuation of inventories. Shall we get started? Meanwhile, you guys solve lot more problems on this chapter, and then wherever you have doubt, you can always get back to me. Yeah, I wanted to solve a lot of problems on bank reconciliation statement. Easy chapter, so do more problems. Varshita, I've shared that PDF with you, so you can have a look at the question in the PDF. Okay, if not, ask me at the end of the class. Chapter 4. So what to expect from this chapter? From these chapters, there are two types of questions that can be expected. One is determination of closing stock under FIFO, LIFO, SAM, WAM. Don't ask me what is FIFO, LIFO, SAM, WAM. I'll explain it little later. For now, रुको जरा, सबर करो. You have to wait, क्योंकि सबर का फल मीठा होता है. You get that? Now, determination of closing stock based on first in, first out, last in, first out, simple average method or weighted average method. This is a very easy way to do it. Very easy thing. You do that receipts issue balance column. That's the reason it is less probable. So this has not been asked in the exam anytime till now. So this is very less probable. It is little time taking. I agree. You would have to draw a lot of lines, but very less probable for the examination. Don't expect that kind of a question in the exam because it has not been asked so far. Okay. What is more probable? Problems on stock reconciliation. They'll give stock value as on one date. They want you to find the stock value as another date. They'll give you a few adjustment. This actually looks like the cousin brother of bank reconciliation statement, if you guys can recall. Yeah, such a topic it is. Okay. Gautam Patnaik is saying that advice was received later, beta. Just because the advice is received in the next month, it doesn't mean that the transaction belongs to next month. Transaction has happened now. The banker forgot to send the message. Banker sent the message later. Okay, so weightage as per ICI's schedule, no, our ICI schedule, 25 to 30% marks is allocated to chapter 2, 3, 4, and 5 put together. From this topic, I expect around 8 marks, maximum of 8 marks. That too, that stock reconciliation problem. One or two true or false, one true or false question can also still come. Done. And there was an attempt where they asked perpetual inventory system and periodic inventory system ka differences. So that's also an important topic that you guys would have to read. Yeah, I've given it. Okay, don't worry. So what are the important topics to revise the day before the exam? What and all should you read from this chapter? You would have to read para 5 of AS2, accounting standard 2, paragraph 5. Sir, what is para 5? I will teach. Okay, don't worry. मैं हूँ ना. Huh? Yes, next one. We have to recall COGS formula. What is COGS formula? That cost of goods sold formula. You remember opening stock plus purchases plus direct expenses minus closing stock. Yes, you would be doing it, calling it, you would be calling it the periodic inventory system. That formula I would have to read. I didn't tell the name periodic, but that's what I mean when I tell this. Okay. Next, after this, you would have to read the difference between the perpetual inventory system and periodic inventory system. Very important. Very important. What are the differences between perpetual and periodic? You would have to read that. Don't miss that. Then stock valuation under FIFO, LIFO, SAM. How do you value stock under FIFO? How do you value stock under last in, first out? Simple average method, weighted average method. Those receipts issue balance. I will not do problem on this FIFO, LIFO, SAM because it's killing. It's like basically killing time. It's something easier. You guys can do it yourself. You wouldn't need help. Okay, next, what and all will inventory include? Inventory will include 3 items. It actually includes 4: stores, spares, and consumption. Consumables are also included, but let us keep that for CA inter. Let's not worry ourselves with that now. So technically we'll read only three things in our CA foundation. What are the three things in inventory? Number one, raw material. Number two, work in progress. And number three, finished goods. I repeat, number one, raw material. Number two, work in progress. And number three, finished goods. Raw materials are 0% processed. Raw materials are 0% processed. The goods are not yet processed. Finished goods are 100% processed. Now tell me, what is work in progress? What is work in progress? Send it to me by chat in the message. I'll see. I want to look at your messages. They just know it's not been very frequently asked. But I told you, no, if it has not been asked frequently so far, it can be asked in your attempt. You might be that special person, Tejas. Okay. My question was, um, raw material is 0% processed goods. Finished goods is 100% processed goods. What is work in progress? What is work in progress? Anyone? Anyone? Come on. Drop messages. Let me see. Raw material is 0% processed. Finished goods is 100% processed. What about work in progress? Semi-finished, half made. It is not exactly half. It is between 0 and 100. Anything between 0 and 100 is semi-finished. If it is more than 0 but less than 100, it is work in progress. A lot of them usually pounds and then say, sir, 50%, 50%. It doesn't really matter that way. Anything which is between 0 and 100% is work in progress. You get that? Now, assume that this shirt industry is what I'm running. The wool or silk or cotton is raw material. The shirt is finished goods. Anywhere in between, the cloth is there or the cut cloth is there or half stitched cloth is there. Entire thing is work in progress. Get that? Okay, now come on, boys and girls. I want you to answer this. Tell me, what exactly is valuation of inventory? Is it an accounting policy or accounting estimate? Don't ask me a question in return. Sir, what is accounting policy? I had given this to you yesterday as homework. Differences between accounting policy and accounting estimate. I told you, no, the important topics that you need to read from chapter 1. Difference between questions. Difference between questions are expected in the exam. There will be one difference between question. They'll ask what is difference between accounting policy and accounting estimate, or accounting concept and accounting convention, or they might ask difference between going concern concept and money measurement concept, something of that sort. Okay. Perpetual and periodic, something of that sort. Now tell me, valuation of inventory, is it accounting policy or is it accounting estimate? Very good. Accounting estimate, accounting estimate, accounting estimate. Everyone's answering accounting estimate. Ah, ha, 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 ha. Wrong answers, guys. It is an accounting policy. What is it? Valuation of inventory is an accounting policy. Valuation of inventory is an accounting policy. You can change. See, FIFO is also correct. LIFO is also correct. You can choose between them. Both the methods are correct. Whatever is more optimum or more correct for me, I'll follow. Or whatever accounting standard suggests, I'll follow. You get that? It is not accounting estimate. Inventory is not estimate. Inventory is policy. Inventory is accounting policy. Everyone is bouncing. Estimate, estimate, estimate. It is policy. Now everyone's changing. Very good. Jyoti is the first one who told. Jyoti Acha. Accounting policy. Very good. Come on, let's go to the next one. It is regulated by accounting standard 2. I told you, no. What are accounting standards? They are written documents issued by government, expert accounting body or other regulatory body, covering the aspects of recognition, measurement, presentation, disclosure. I don't know how many of you recall the definition. That's the definition of accounting standards. So, a lot of accounting standards are there. Accounting Standard Board of ICAI has issued 32 accounting standards, of which accounting standard number 2 deals with valuation of inventories. So, we're discussing accounting standard 2. That will help us talk about this particular topic. So, don't be scared. Don't be scared. Not the entire standard is part of your CA foundation syllabus. Accounting standard 2 is to be read in CA Inter. Where will you read accounting standard 2? CA Inter. What you have in CA foundation is only little bit, only one paragraph of accounting standard 2, not much. Okay. What does paragraph 5 say? What does para 5 of AS2 say? It says that inventory should be valued at cost or net realizable value, whichever is less. Cost or net realizable value, whichever is less. Why? The reason is simple. Reason, anyone who can tell me the reason why we go by cost or NRV, whichever is less? Anyone reason? Shall I write? Conservatism. So what is the reason? Conservatism. What do you mean by conservatism? We need to account for expected expenses and losses, but not for expected incomes and gains. So we're expecting a loss in the future. The cost of the goods is 100. The cost of the goods is 100. You are expecting that you can sell it only for 80 rupees. So if the cost of the goods is 100 and you sell it for 80, you would make loss of 20. Yes, you would make loss of 20. You would not wait till you make loss. You would record it now. You would not wait to actually make the loss and then record it. You will record it right now. So that is conservatism. So going by conservatism approach, that is being very prudent, you would have to record the asset. You would have to record the inventory at cost or net realizable value, whichever is less. You get that? Right now, at the foundation level, we're reading only finished goods. What are we reading? Only finished goods. Raw material and work in progress valuation we are not reading. Raw material and work in progress valuation we read in CA Inter. We read in CA Intermediate. Get that? Conservatism. It is not conservatism concept. It is conservatism convention. What nonsense, man. I have told you so beautifully yesterday. Concepts and conventions are not same. You cannot call conservatism as concept. It is convention. I've told. I've told. Still, go to. I'll not talk to you people. You people are giving wrong answers in spite of me teaching it to you correctly. Let us go ahead. So before you assume whatever you want, no, let me clarify and then tell you what exactly is cost and what exactly is net realizable value. So cost. What are the items that are included in cost? Cost includes. Yeah. What are the items included in cost? Okay. Conservatism is convention. Remember that. Includes purchase price. What will it include? Purchase price and expenses. What expenses? Till asset is, or sorry, till inventory is ready to use. Yeah, till the time inventory comes to use, if there is any expenses incurred, it will also be part of your cost. Okay, I'll write it in a different word. I'll write it as directly attributable cost expenses. What will I write? Directly attributable expenses. You get that? So cost includes purchase price and directly attributable expenses. If there is any general expenses or overheads, that will not be included in the cost. What about net realizable value? Realizable value means when you sell it, what you receive is realizable value. So that is realizable value less expenses. That will give you net realizable value. You get that? Now, if I have to tell a specific item, if I have to sell a specific item, now assume that I'm selling this bottle. If I sell this bottle, I'll get 100 rupees. But in order to sell this bottle, I would have to, I don't know people. I know you and you know people. So I'm going it through you. I'm taking your help to sell. You're asking me commission of 10 rupees to sell this bottle. So on selling this bottle, I'll receive 100. But I would end up paying 10 rupees commission to you. So 100 minus 10, 90 rupees. 100 minus 10, 90 rupees is what? 90 rupees is the net realizable value. Realizable value is 100. But out of that 100, 10 rupees is my expense that I pay to you. My net realizable value will become 100 minus 10, 90. 100 minus 10, 90. I hope you got it. Yes. What is PP? Purchase price. There is a little detailed discussion. You guys would have to refer your original material, class notes or SS material for this. I've just quickly run you through that part. Okay. Next up, inventory valuation techniques. So how do you value inventory? Inventory can be categorized into two: non-ordinarily interchangeable, ordinarily interchangeable. Now, what do you mean by non-ordinarily interchangeable? There are specific items which are customized. Now maybe a designer way. It's only one of its kind. You get that? It's a customized one that cannot be easily interchangeable. Now, if you go to a gold shop and then buy a necklace, one necklace and the other necklace is not the same. Each necklace price will be different. Why? The amount of gold that would have gone into it is different. What about ordinarily interchangeable? Now, if you would have to buy a bottle, this bottle is also same price. Another bottle which is in a different color or same thing. Every bottle is of same price, isn't it? Phone. Every phone of this model is of same price. But if you go to gold or if you go to designer jewelry or anything, each of it will be you select and the price will be different. Item to item, the price will change. There will not be 3 4 items with the same price. You get that? Price will be different for each item. So when the prices are different for each item because the material that is involved in that product are different, that is what they say non-ordinarily interchangeable. Whereas if the product has been taking same inputs and price of each of it is same and the cost of each of the items are same, then it will become ordinarily interchangeable. If an item is not ordinarily interchangeable, you have only one method. Only one method. What method is this? Specific identification method. Specifically, you need to identify how much of cost has gone into it, and that will become our cost. You get that? Specifically, you will identify how much of items have gone into that, and that will become our cost. That is non-ordinarily interchangeable items. If it is ordinarily interchangeable, then there are two ones. One with considering a historical cost, and the other one without considering historical cost. Considering a historical cost, we have first in first out method, last in first out method, simple average method, weighted average method. And without considering historical cost, we have adjusted selling price method, standard cost method. There are a couple of other methods called as latest purchase price method and other things, retail price method, but we are not reading it as a part of our examination syllabus. Now, what are the methods that we follow for the examination perspective, or what are the methods which are allowed by ICI or Accounting Standard 2? Accounting Standard 2 tells that we need to follow specific identification method. We need to follow specific identification method because there is the only method available for not ordinarily interchangeable goods. However, if the goods are ordinarily interchangeable, then either you can follow first in first out or you can follow weighted average. You cannot follow last in first out or simple average. No, last in first out doesn't suit our economy. Doesn't suit our economy. And simple average method has lot of drawbacks. So either you would have to be following first in first out method or you would have to be following weighted average method. I repeat, either you would have to follow first in first out method or you would have to follow weighted average method. You get that? So that's it with respect to this part. If you want to make a quick note or take a screenshot, I'll leave it to you people here. Yes, come on, let us go ahead. Next thing, cost of goods sold. So what is the formula for cost of goods sold? I mentioned this to you a little while ago as well. So cost of goods sold is opening stock plus purchases plus direct expense minus closing stock. So questions on this will come under our periodic method. Which method? When the records are not correctly maintained. Periodic inventory system. Perpetual system is this. What is? Can you guys still hear me? I hope everything's fine. Can you guys hear me? I hope everything's fine. Give me messages. Give me message. Yeah, because I saw some error here. Oh, fine, perfect. Beautiful. Let's go ahead. So this is important, guys. Don't miss this difference between periodic system and perpetual system. It has been asked in the exam once, and it's little probable. If a question comes in the exam, don't curse me because I didn't discuss. I didn't tell. Or don't tell if it doesn't come. Don't tell like okay that idiot told it didn't come. No, no, no. Firstly, I'm not an idiot. Secondly, I'm not person who's setting the paper. I'm just telling you this is important. You guys would have to read it. Yes, if you want, I can discuss it right now. Under periodic system, what do? We use that COGS formula. Whereas under perpetual system, what do? We do it as FIFO, LIFO, SAM or WAM. Under perpetual system, no detailed books of accounts will be there. Detailed books. On any day, if you tell me 14th of April, I can tell you how much is the inventory. If you tell me 16th of May, I can tell you how much is the inventory. So detailed books are maintained and the inventory can be identified on any given date. Under which method? Perpetual system. Whereas under periodic system, what do? We would have to identify the sales made till that date. We would have to set a profit percentage till that date, eliminate the profit from that sales, and then arrive at cost of goods sold. And using that formula, opening stock plus purchase plus direct expense minus sales, closing stock, would have to find closing stock. You get that? COGS is sales minus GP. Opening stock, last year's closing stock. Purchases, you would see the amount of payment. Direct expense, again in the cash book, you would know. You would add up and then subtract these items to identify COGS. Periodic inventory system. But practically in the world, what's followed? Perpetual system. Whereas, because if you follow accounting under perpetual system, later you can do that physical verification and then check whether it is correct or not. Whereas if you don't maintain the records and if you do it under periodic inventory system, there is no place for you to check what is correct, or you don't have any opportunity to check whether what you done is correct or not. You'd have to just do something and then stick to it. You guys get that? Yes or no, guys? You would have to read it a little more beautifully. Please read it. Please make a note. Don't skip that part. Then stock reconciliation. This topic is like I told you, this is like the cousin brother of bank reconciliation statement. It's like you start with balances per passbook or cash book. So here also you start with balances on one date, and then what will you do from there? Add less, add less, add less. What will you arrive at? You will arrive at the stock as on another date. Okay, that's what you need to do. And this topic is examiner's favorite. Like you know that Suryavamshan movie keeps coming on Set Max, no? That Sony channel. Exactly similarly, this stock reconciliation question keeps on coming in examination. So very, very, very repeated question in the examination. So highly predictable and highly expected. Please don't skip this topic. Humble request, don't skip this topic. Please do it. Okay. There are two types of stock reconciliation questions that can be asked. How many types? Two types. This given is what will be given to us in the question. So what do you mean by given? Question. Whatever they mention in the question is given. So what will they mention in the question? They will mention physical inventory. Now, we also do this when we are practicing and a client comes to us. At the end of there, we go physically and then count the inventory and then check whatever the closing stocks that is there in the books and whatever the physical inventory they have, are they matching? We'd have to check. But the balance sheet is prepared on 31st of March and the inventory to be written in the books of accounts is on 31st of March. But we would not be able to do the verification on 31st of March. What happens? See, we have like 100 plus clients. We can't visit all the 100 clients and then do stock verification on 31st of March. Or if you would have to maintain, if you'd have to verify the stock physically, the movement of the stock should stop. You can't ask them to shut down the business on 31st of March. So what is it that you would do? It would be kept on some Sunday in the month of April or some late night in the month of April. That's what you do. So you take the physical verification of the inventory not on 31st of March but after 31st of March. You get that? But that after credit, maybe example, assume like 10th April. So you arrive at the stock verification on 10th of April. From the 10th of April wala stock, you would have to identify the stock of 31st of March. How do you come back in time? That's what we're going to learn here. Or instead of doing it after 31st of March, we did inventory valuation on 28th or 25th for one client. So we know the inventory was on 25th of March. We would have to identify the inventory as on 31st of March. What do? We add or less few items. That's what is the question about. So given is what's available in the question. Asked is what is expected from us in the solution. My name, I have given one name to this problems and what to do is also given here. Okay. If the physical inventory before year end is given, so they've given physical inventory as on 25th of March. Example. In this case, they've given 25th March. They've given. They're expecting it on 31st of March. So from 25th of March is known. 31st of March is not known. Are we moving forward or are we moving backward? We're moving forward in time. We're moving from 25th of March to 31st of March. We're moving forward. Those are forward problems. What are those problems? Forward problems. You get that? So when we're moving forward, whatever comes in will be added, whatever goes out will be deducted. I repeat, whenever we're moving forward, whatever comes in will be added, whatever goes out will be deducted. Okay, what are inflows here? Example, purchases. What are outflows? Example, sales. So purchases will be added, sales will be subtracted. When? When we're moving forward. When we're moving forward, Purchases will be added, sales will be subtracted. Example is purchase and sales. What exactly is it? Add the inflows of stock, deduct the outflows of stock. Next, if it is the physical inventory after the year end, they've given somewhere like 10th of April, and they want you to find the inventory as on 31st of March. So we've gone ahead of time. 10th of April we've gone. Now we're coming back to 31st of March. Do you agree with me? We've already gone up to 10th of April. Now we're coming back to 31st of March. When you're moving backward, what is it that I would have to do? I would have to do ulta. Inflows will be deducted, outflows will be added. Inflows will be deducted, outflows will be added. We're moving backwards in time. It's like you're watching reverse mode now. Like when I'm moving forward, I give, I take. When you reverse the video, whatever I gave, I'll take back. Whatever I took, I give back. You get that? So it's like reversal. I hope it's making little sense. Send a couple of messages so that I'll understand that you guys are understanding it. Send. Now let's see. Is it making sense, guys? Drop a message or two saying that you understood. Oh, dab. Neeraj is dabbing. Yes. Understood. Come on, let's go ahead. Yo. Okay. There are few things which are tricky in this chapter. There are few things which are tricky. What are the items which are tricky? Tricks of this trade are treatment of goods sent on return or approval basis. What is it? It's about the treatment of goods sent on return or approval. Whenever the goods on sent on return or approval basis, how do we treat it? Whenever the goods are sent on consignment basis, or if there is any loss of goods, how do we treat it? These are interesting. And the next one that's interesting is profit element on sales and sales return. Yeah, we would have to do these topics and then only we can go further ahead, because after we do these topics, no, I would have to solve problem. So in order to be solving the problems, we would have to be well versed at these topics. So shall we discuss this tricks of the trade? So the tricky items. So we'll discuss the first item. Hmm. Akshay, can you tell me which part do you want me to repeat once? If it is this part, if they give you 25th of April or date before the year end, and if you're moving forward, you would have to add what comes in, deduct what goes out. If you're moving back in time, they've given you a date after the year end, and you're trying to identify the year end card data. Then you're moving backward in time. You do opposite. You deduct the inflows and then add the outflows. Okay, Akshay Naveen. Okay, we'll discuss these tricks of the trade. Now, firstly, assume that you have sent the goods on return or approval basis. Firstly, is it sale? Is it sale? Tell me yes or no. Is it sale? When you have sent the goods on return or approval basis, is it sale? Is it sale? It is not sale. It is only transfer of possession. The goods are with someone else. The goods are with someone else, but it belongs to you. So what should we do? Include it in closing stock or exclude? We would have to include it in closing stock. What is it that we would have to do? We would have to include it in closing stock. So when we physically count the inventory, those goods which are sent to someone else, will it be there with me? Now assume I have a couple of friends here from Hyderabad who will texting. Now assume what has happened is I have certain books of mine. I have written book on Mahabharata. Okay, I'm writing one. I'm just telling you people, I'm writing short stories on Mahabharata, which should be seen from students' perspective. Students' insight into Mahabharata. What should students read 1 month before the exam? What are the lessons that one can learn from Mahabharata? I'm writing that book. Assume that I write that book. And my dear friend from Hyderabad is saying, sir, I want to sell those books. I'll tell, okay, fine. I'll send these books to you. So I've sent those books to him on sale or return, or say return or approval basis. Meaning, he has an option to either sell those books and then pay me the money, or he has an option to return those books back to me. When I've sent these books to him, have I sold it to him? The answer is no. What have I done? I've only transferred the possession of the goods to him. Now, if you check my physical inventory in my godown, will those books be added? Will those books are those books part of my inventory? Physically, will it be available with me? No. Physically, it is not included. But it is my goods. I would have to include it. It is my goods, I would have to include it. Did you understand? So physically these goods are not there with me. Physically are these goods there with me? No, not part of physical inventory, but it should be included in book inventory. Are they part of physical inventory? No, not part of physical inventory. Okay, I'll write it in red. Not included in physical inventory. But what is it that we'd have to do? We'd have to include in book inventory. Very important. Remember this. Is it sale? No, it is not sale. It should be included in closing stock. Is it part of physical inventory? No, it is not part of physical inventory. But what do? We have to include it in our book inventory. Perfect. I hope everyone has understood. No, 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 no. What is no? Oh, you're telling no. Okay, fine. That one. Okay. Next one. Goods sent on consignment. Okay. Again, similar. I have goods. I have sent it on consignment. Is it sale? Is it sale? Is it sale? Come on, answer again. It is not sale. It is not sale. Should I? It is only transfer of position. Should I include it in my closing stock? Yes, I would have to include it in my closing stock. Include it in my closing stock. Do you guys get that? I would have to include it in my closing stock. Physically, will I have the goods with me? Who will have the physical inventory of the goods? Will it be with me? No. Physically, it would be with my consignee. Physically, when we count, it will be there with the consignee. When we physically count the inventory in my godown, it will not be there. After I count the inventory in my godown to that stock, I would have to add such stock which is there with my consignee. I would have to add such stock which is there with my consignee. Do you guys get that? I would have to add such stock which is there with my consignee. If I am the consignee, assume, different case. I am the consignee. Someone has sent me goods. Now from Hyderabad, my friend has told, okay, sir, I'll send you some gongura pachdi, you sell it. He sent it to me. I'm not the owner. I have not purchased it from him. I only have the possession of it. What they have? I only have the possession of it. Now tell me, when you count the inventory, will it be counted in my inventory? Physically, when you count, that will be included. But will it be included in book inventory? Should we include? No. What is it that we do? After we count the physical inventory, we would have to deduct that because that is not my goods. That is consignment goods of someone else. I am the consignee who is a mere agent holding it. Do you get that? Yes or no, guys? Break. Yeah. I'll give break in some time. Next one. Loss of goods. If there is any loss of goods that has happened, we have to deduct it. Loss of goods means it might be because of pilferage. It might be because of rod ends. It might be in the transit. When you kept certain goods in the godown, some rod ends might have come and then destroyed it, or because of weather, it might have been destroyed, or some robbery might have happened, or the goods can be destroyed in the transit also. In such case, also, you would have to adjust it. Done. Okay. What is the meaning of consignment? Oh. Okay, I will tell. Tejaswini will discuss. We'll discuss consignment. I will put it, ma. दिखाऊंगा. Wait. इंतजार करो. See? Where are we? Sir, what are you doing, sir? See, ma. Consignment. I will put it separately. I'll discuss it there. Tejaswini, I'll discuss it there. Consignment separately. Till then, रुको जरा सबर करो दानಗಳಲ್ಲಿ ಅತಿ ಉತ್ತಮ ದಾನ ಸಮಾಧಾನ. So what is it that you have to do? Wait. Hmm? Till then sing. इंतजार कब तक हम करेंगे भला. Janak is asking. Janak, I have already sent this file to you people. But after writing, if you want me to send that file on which I have written, I don't mind. I can send it once again. Okay. But however, not all the chapters are updated. You can actually feel it right now. My nose is blocked. I have a headache and light fever. So very sick. And yesterday I had long class after your result and I had little other office work. And I had to work on your file after 10 o'clock. I worked on it around 11 o'clock is when I sat. I had to do it till 2 and then I sent the file to you people at 2 to 30. Not to worry, I'll work on the remaining file tonight and then send it to you, the extended part of this file, and I'll finish it in day after tomorrow. Okay. So you want me to send this file right after I write, I'll send it at there. Okay. Okay, Jana, don't worry. Okay, sir, come on. Let's go ahead. So profit element. See, whenever we do closing stock should be taken at cost price, not at selling price. I repeat, closing stock should be taken at cost price, not at selling price. So how do we take at cost price? We'd have to eliminate the profit element. We'd have to eliminate the profit element whenever it is being given. So profit element can be, it should be removed on the sales and sales return part. How do we remove it? Remember carefully and read the question cautiously, because the profit element can be either given, the profit as a percentage can be either given on sale or it can be given on cost. I repeat, profit can be either given on sale or it can be given on cost. Sahil, this live video will be there in the YouTube channel of SS Academy. You can watch it after the class also if you want again. Okay. So the profit, what to say? The profit as a percentage can be given. It can be given as profit as a percentage of selling price, or it can also be given as profit as a percentage of cost also. So both will be possible. The relationship between profit on cost and profit on sale is dabba. I mean, say it's in the dabba below. You would have to read it. Okay, understood? Now don't worry. Don't be worried. What is dabba? Dabba means box. What does dabba mean? Box. Now don't ask what is box. This there no below, that is only box. And I'm explaining this also to you. Have a look. Okay, on the cost. On the cost means not yet sold. So you are with her. Feeling shy, huh? You are with her and you are over her. Okay, you get that? So you are over her. Now she has become X. So you are over your X when it is on cost. When she is sold, when she is taken, what will be there? You will be over her, but she'll be with someone. I'll repeat, on the cost, it is 1 divided by x. You are over your x. You're still in cost terms. You can still get back. But once she is taken, you are still, this is you. This is you. You are over her, but she is with someone. So you do 1 by x for cost, and on sale it is 1 by x plus 1. On sale it is 1 by x plus 1. Did you understand whatever I'm telling? Arthamautunda? Okay, now it is 1 by x. 1 by x is 1 by 1. So what is it on sale in that case? On sale I will use blue. Sir, why blue? Blue is nice, guys. Okay, it will be 1 by 1 plus 1. That will be 1 by 2. Do you agree with me? Do you agree with me? 1 by 2. Okay, next. On sale it is 1 by 3. On sale it is 1 by 3. But before being sold, only you were with her and she didn't have someone with her. So here it is 1 by 3 minus 1. That someone was not there with her. So it would be 1 by 2. Does this make sense? Does this make sense? Give me, say something other than yes sir, yes sir. Yes, sir. Something other than that. I understand. Understood, sir, is nice. Say something other than yes. Prithvi is saying, Prithvi, consignment stock is not included in the physical stock. Consignment stock, now you tell me, Prithvi, are you consigner or are you consignee is the question. I'll tell you both the cases. Assume you are consigner. You are consigner. You have sent goods on consignment. Physically, when you verify the inventory, in that physical inventory, consignment stock is not there. Why? Consignment stock with you is your consignee. What you would have to do, after you identify the physical inventory, you will add that consignment stock which is there with the consignee to arrive at your book inventory. Physical inventory will not include the consignment stock in the case of consigner. After you arrive at the physical inventory, you add the consignment stock with the consignee to arrive at book inventory. Understood? Next point. Assume you are consignee. You are consignee. You are consignee. When you take the physical inventory, that physical inventory will include consignment stock. But you are not the owner. So physical inventory will include consignment stock, but it should be deducted to find my book inventory. It should be deducted to find my book inventory. Why? In the case of consignee, the book, the goods are physically there but doesn't belong to you. Oh, something went my brain. So I thought I understood. Okay. Prithvi, I just answered. Okay, next. So on cost it is 1 by 3. You are over her. Now she has someone with her. On sale, what will be there? She'll be with someone. 1 by 3 will be there. She is with someone. So it will become 1 by 4. Done. Next. When you are over her, she is 4. So now on sale, what will happen? She'll be with someone. So it will be 1 by 4 plus 1. 1 by 5. Okay, understanding? Okay, next one. 50%. And what about here? Till now it was fractions. It was easy. Whenever it was fractions, you were there, she was there. Now you both are there, but it's given as percentage. Now it's tricky. So now you tell me, what do you mean by 50%? 50% means, can I call it 50 divided by 100? Sir, what is percent? Percent means per century. What do you mean by percent? Percent means per century, guys. Concentrate. Per cent means per century. Per means divided by. Century means 100. So 50% means 50 by 100. Did you guys get this? Okay, 50 by 100. 50 by 100. Don't you think 50 by 100 is 1 by 2? Sir, do you know 50 tables also? Yeah, I know 100 tables also. 100 ones are 100, 100 twos are 200. See, 50 by 100. Sorry, 50 by 100 is 1 by 2. How about here? It will be 1 by 2 minus 1. That will be 1 by 1. That will be 1 by 1. Did you get this? Let us go to the next one. It is 50% here. 50% is how much? 1 by 2. What will it be on the sale? It will be 1 by 2 plus 1. That will be 1 by 3. 1 by 3 is 33.33%. What is it? 33.33%. You guys get that? Tejas and Krishna, what is it that you're not understanding? Which topic? Is it this topic? You would have to write it in fractions. And if they've given on sale, to find it on cost, you would have to subtract 1 in the denominator. If they've given on cost, and if they have to find it on sale, you would have to add 1 to the denominator. Yeah? It's simple, Krishna. You would have to add 1 to the denominator when you're moving from cost to sales. When you're moving from sales to cost, you would have to subtract 1 from the denominator. Denominator, add 1, subtract 1 is what we're doing, Krishna. Okay, next. 25% is 25 divided by 100. Can I call this 1 by 4? 25 ones are 25 fours are. So what will it be on cost? On cost it will be 1 by 4 minus 1. That will be 1 by 3. And 1 by 3 is how much? 33.33%. Do you guys get this? It is 33.33%. Okay. Next, 25%. We know it, no? 25% is how much? 1 by 4. How much will it be on sale? 1 by 4 plus 1. That will be 1 by 5. How much is 1 by 5? 20%. I hope it's not difficult. Then 16.67. This is 1 by 6. 1 by 6. Now, if that is 1 by 6, what will it be here? 1 by 6 minus 1. It will be 1 by 5, which is nothing but 20%. You guys get that? So I just filled it up. Okay. Hope you guys got this. Remember, hope is a good thing. In fact, the best. And good things don't die. No points for guessing which movie does this statement come from. Anyone? Okay, still. Can you guys guess which movie does this dialogue come from? Hope is a good thing. In fact, the best. And good things don't die. No one's busy. Everyone's busy. No one knows it. Krishna and Tejas, it's pretty simple, guys. It's pretty simple. If they've given that on the cost it is 50%, on sale it will be 100%. Sorry, if they're given on cost it is 50%, then on sale it will be 33.33%. If you didn't understand, because you didn't understand, I'm explaining it to you again. Have a look. Assume the selling price is 100, 200 is selling price, cost price 100. How much is our profit? 100. You get that? How do we get profit? Profit is selling price minus cost price. Selling price minus cost price is equal to profit. Okay. We'll take break. We'll take break in some time. Okay, chill, chill, chill. Huh. Now, if I would have to find profit percentage, it can be computed as profit on cost, or it can be also found as profit percentage on sale. Okay. Now, if I would have to find it as profit percentage on cost, how will you find it? Profit, name itself says no. On cost, profit divided by cost. If I have to find it on sale, the name itself says it, isn't it? What is it? Profit. Profit divided by selling price. Okay. Now, let's do this. How much do I get? Profit percentage. Have a look here. Profit percentage on cost. It will become like 100 by 200. So, can I write it as 1 by 2? And this started a it is 1 by 2. Whereas what is it on cost? 1 by 1. So how did you get this? Profit is 100 divided by 200. How about here? 100 divided by 100. So what I'm trying to tell is on cost it is 1 by 1, on selling price it is 1 by 2. So it is 1 by 1 divided by 1 plus 1. 100 by 1 plus 1. That's what I'm trying to tell you. Tejas, did you understand now? I think Krishna also got it now. Krishna, did you get it? Krishna, I thought was asking the same doubt. I hope you got this point. Okay. So now this is where we've stopped. Okay. If you want to make a small note of this, Krishna and Tejas. Hmm? Okay. So I hope you got it till here. And now we would have to do a problem on this. So I've picked two problems, hand picked two problems. We'll solve this. But before we solve these two problems, we'll take a break. It's 9:49. We'll take a break and we'll come back. It's 9:50 now. I'll see you all at 10:20, 30 minutes. Okay. Take 30 minutes break. See you all at 10:20. What time are we coming back? 10 o'clock, 20 minutes. 10 o'clock, 20 minutes. See you all at 10:20. I'll just drop a message also. Please do have your breakfast. Don't be starving and then come back. Yes, Aditya, I'll do both the problems. I'll do. I don't mind. I'll do both the problems better. Don't worry. Yes, guys. So that's it. Come on, let's take break. Check. How are you all guys? Are you guys back? Did you have a breakfast? How are you all guys? Are you guys back? Did you have a breakfast? As you can see, I'm back. Yes, I had my breakfast. I did. As you can see, I'm back. Yep. Let's get going. Before we had breakfast, we had done the introduction with regard to our inventory chapter. Now, what will we do? We will now. Okay, wait, I'll mute. Huh. We will now solve problems on valuation of inventory. So I have handpicked two questions. We'll solve these two questions. There is still several other questions that's there. HS material comprehensively covers lot of questions. If you can do all of them again, that's sufficient enough. Yeah, but do practice because the probability of questions on this is little high in comparison to other topics. So when there is such good probability, why is it that you guys should skip this topic or take this topic lightly is my point. Come on. So let's get started. The topic that we have is closing stock is valued as on valued by XYZ stores on generally accepted accounting principles, that is GAAP gap. Stock taking for the year ended 31st March 2017 was completed by 10th of April 2017. So when did they do their stock verification? 10th of April. So now tell me, are we doing forward or backward? Because they've given it as on 10th of April, we're finding it as on 31st of March. We're doing forward or backward? Message, Muddy. Type it. Forward or backward? Forward or backward? Forward or backward? Forward? Such में Saurabh, are you sure it's forward? They've given it as on 10th of April, where you should find on 31st of March. What comes first, 31st March or 10th of April? In my calendar, first month of March will come, and after, if you tear that page, you'll get April. I don't know in your calendar. I'm surprised. People are still selling forward. It is backward, guys. They've given inventory as on what date? See, was completed on 10th of April 2017. The valuation of the stock showed 1,67,500. So this 1,67,500 is on 10th of April. Is on 10th of April. We are trying to find the stock as on 31st of March. Isn't it backward? They've given stock as on 10th of April. We are trying to find the stock as on 31st of March. Don't you guys feel like we're moving backward? We have to go backward. So when you're going backward, what do we add? What do we deduct? We deduct inflows and add outflows. We deduct inflows and add outflows. Am I right? We deduct inflows and add outflows. Yes. Why? It's like this. Morning I had three chocolates. Morning I had three chocolates. And during the day I purchased two chocolates and I ate one chocolate. So morning I had three. I bought two more. It will become five. I ate one. It will become four. Four chocolates are there at the end of the day. We add purchase. We deduct sale. Now if we're going backward, at the end of the day I have four. At the end of the day I have four. During the day I purchased two and I had one. So how much did I have in the morning? I had one. It will become five. During the day I purchased two. If I'll deduct two, I'll get three. You guys get that? So whatever is sold will be added. Whatever is purchased will be deducted when we're going back in time. When we're going back in time. Yes, reversal. Purchases should be deducted. Sales should be added. Not just purchases. Any other inflow should be deducted. Any other outflow should be added. Yes, that is it. That's what they're asking. Okay, read the last line of the question. You are required to calculate the value of the stock for inclusion in the final accounts as on 31st of March 2017. Okay, let me do this. We're doing question number 8. Inventory based question. So I'll have particulars amount column. Two amount columns, one for the inner column, inner totaling, and the other one is the outer column. So they're given stock, physical stock as on what do you say, 10th of April. 10th of April 2017. 2017. How much is that? That is 1,67,500. Okay, I'll write 1,67,500. Perfect. Madhumati has already solved it. Very good, Madhumati. You know what, Madhumati? Even I have done this all long ago when I was in CA Foundation. Even I have finished it. Okay, there are few items which we need to add, and there will be few items which you need to deduct. Should I be rating it as 1, 2, 3? Not necessary. Okay, fine. We'll see each item separately. Come on, first one. At cost, they've given at cost, completion date, after the end of the accounting year till the date of stock taking, these transactions have happened. I'm reading the first point now. Sales for the next year made rupees 6,875. So sales is outflow. What is sales? Sales is outflow. I told you when we're moving backward, what do we do? Inflow minus outflow add. Why? We're moving backwards. We're moving backwards. Have I mentioned it? So sales is outflow. What do we do? Add. Why? Because this 6,875 worth goods was there with you as on 31st of March. But after 31st of March, before 10th of April, you sold it. So you don't have it on 10th of April. Do you have those goods with you on 10th of April? No. Did you have those goods with you on 31st of March? Yes. They've given 1,67,500. This 1,67,500 does not include the 6,875. But it was there with you on 31st of March. In order to find how much you had on 31st of March, you have to add this. You have to add this. But you would have to add it at cost. You would have to add it at cost. They've told that profit percentage is 33.33% on cost. So can I say this is 1 by 3 on cost? 1 by 3 on cost. Can I call it so? After they give it as 1 by 3 on cost, they have given here sales. So how much is it on sales? Tell me, how much is it on sales? Can I call it as 1 by 4 on sales? Yes or no, guys? Did you understand? 1 by 4 is 25%. 1 by 4 is 25%. So out of this 6,875, there is 25% profit margin. What I need to exclude? So I'll write here, it's a less item. What is it? Sorry, what is it? It's an add item. Add sales at cost. How do I arrive at it? 6,875. Is that the value? 6,875 minus 1 by 4 of sales. 1 by 4 is how much? 25%. 25% of 6,875. Calculator really. I'll do 6,875 minus 25%. It comes to 5,156. No, can you see? 5,156. So I'll write here add item 5,156. Perfect. In fact, I'll write it a little below. Okay, guys, perfect. Let's go to the next one. So we're done with the first one. Next one, purchases for the next one. Purchase is what? Purchase is inflow. Inflow, what do we do? Inflow should be deducted. Inflow should be deducted. So this is technically a less item. Okay, done. Now concentrate. Purchase of the next year, including the stock, amounted rupees 9,000 at cost, less trade discount 10%. So how much is the trade discount in this case? 10%. Okay. So purchase of the next year, including the stock. Next year ka purchase. It is purchased after the 31st of March. So what do? We would have to deduct it. At what price? 9,000 minus 10% trade discount. How much is the 10% trade discount? 10% trade discount comes to 900 rupees. So 9,000 minus 900. How much does it come to? It comes to 8,100 rupees. Am I right? So 8,100. What do? We deduct it. What is it? Purchases. Discount 9,000 minus 10% of 9,000. How much does that come to? That comes to 8,100 rupees. Perfect. Yeah, 900, 8,100. Hey, not 810. It is 8,100. Okay. It's 8,100. Oh, I think she forgot 10. Okay, let's go to next one. So we're done with the second one. Let's read the third one. During this period, goods were added to stock of the markup price 300 in respect of sales return. Okay, with respect to 300 rupees, what has happened? It has been included in sales return. Yeah, sales return is what? Sales return. Goods are coming back in. It is inflow. Do you agree with me? Do you agree with me? It is inflow. Goods are coming back inside. See, when you sell goods, goods are going out. When they return, it's coming back inside. So sales return is inflow. We would have to deduct it. We would have to deduct it. Now, this is 300. 300 is selling price. There is profit in this included. Profit. How much? 1 by 4. Or we can say 25%. It is 25% profit element. We would have to adjust that. Now tell me, what is it I would have to? I would have to subtract. I would have to subtract. What is it? Sales return. So I'll write less item, sales return. Sales return. Okay, at cost. Hey, remember everything at cost, okay guys? How much is it? 300 alva. 300 minus, how much is that profit element? 25%. So shall I write 25% of 300? Okay, how much does it come to? 300 minus 25%. That comes to 225. Oh, I didn't show 225 to you? 225. Can you see 225? Okay, come on. Let us go to the next one. So sales return is done. Next, after stock taking, it was after stock taking, it was found that there are certain very old means your grandfather when he was running a shop, he had bought it. Those goods are not sold by your grandfather. Those goods are not sold by your father, and you don't think that you will sell them. They are very slow moving. Very less people ask for those goods. Okay. So what's happening? Slow moving items, and their cost is how much? 1,125. Okay. Which should be taken at 525. So what are they doing? Are they decreasing the value or increasing the value? Decreasing the value. Those goods were there at 1,125. Now they want to record it at 525 because if you tell the price of those goods as 1,125, nobody on the planet will buy it. Only an alien should come from Mars to buy it. You get that? So nobody on the planet is going to buy it from you. So what will you do? You are reducing the price from 1,125 to 525. So reduction, the name itself says no, reduction means less. Means less. How much should we deduct? 1,125 is the price. I am reducing it to 525. So 600 rupees the reduction. Do you guys agree with me? 600 rupees has to be deducted. So what will I do? I will subtract 600. I will subtract 600. Understood, guys? What is it? Revaluation. Yeah, your wife will call revaluation. That only. Revaluation of slow moving stock. Sir, slow moving stock means JCB. Slow moving stock means very less people are intending to buy. Okay. How much is it? It is 1,125 minus 525. 1,125 minus 525. How much did we get? We got 600. Perfect. Let us go to next one. After that, what do we have? Due to heavy floods, so water and all is coming inside those. You are doing chimming. You understood? You are doing chimming inside the shop and all. 1000 costing rupees, goods costing rupees 1050, 550 were received from the supplier beyond the delivery date. Okay, you have a customer, that customer has ordered goods from you, so you ordered goods from supplier. When you ordered goods from supplier, those goods were delivered to you late. Those goods were delivered to you late. Why? There was flood and your supplier couldn't manufacture those goods. Like you are importing goods from Gujarat and then selling it in Bangalore. Your customer in Bangalore placed an order. So you ordered for goods in Gujarat. There are floods in between in Maharashtra. So the goods couldn't come from Gujarat to Bangalore. So what happened? It reached us late. So we cannot give it to our customer. You get that? Okay, what is the cost of these goods? 1550. Now see what's happening. For received supplier from the supplier beyond the delivery date of customer. Our customer had wedding in November. We received the goods only in December. Now will our customer buy the goods from us? No, wedding is only over. What will he do with those goods? Now what is happening? As a result, customer refused to take the delivery. He says, I don't want goods. Your goods, you keep it. Yeah. A net realizable value of these goods is 1250. Interesting part is you purchased it for 1550, but you are going to sell it for 1250. You purchase it for 1550, but you can sell it only for 1250. This is again a reduction in the value of goods. What is this? A reduction in the value of goods. Value of the goods is reducing. By how much? It was 1550. Now we're reducing it to 1250. Technically, it is reduction of 300 rupees. Do you agree with me? It was 1550. Now we're reducing it to 1250. So the reduction is 300 rupees. So 300 rupees reduction minus. Shall I write it? One more thing is we're following accounting standard 2, which says that inventory should be valued at cost or NRV, whichever is less. Cost of these goods is 1550. Net realizable value is 1250. So we have to record it at 1250. It is previously recorded at 1550. So we should decrease it by 300. 1550 minus 1250 alva. Done. Perfect. And that's it. You are required to calculate the value of closing stock to be included in final accounts. Now we'll add this and then put it here. Outer column. Okay. This is inner column. Only one item is addition. So it looks funny. But usually there will be a lot of items. There is no rule. Okay. There should be only one item add. And in the exam by mistake you get only one item add and then everything else less. No. Don't say, tappide. I think I've done something wrong. Two items. Safety side I'll put two items this side. Don't do that. Don't do that. So I've put lines also. In the exam, should you put lines? Don't waste your time in the beginning putting lines. You solve the entire problem. You solve all the other questions. After you finish all the questions in the exam, if you have time, come back and then put lines. Just because you put lines, you will not get marks, okay? And just because you have not put lines, your marks will not be deducted. Even for ledger account, there is no need to put lines. You can just score the page in the middle and then write the answers. Fold the page in the middle and then just go on writing the answers. Okay. What is this? Inventory to be included in final accounts as on 31st March 2017. Yes, that's it, guys. I'll leave this with you for a moment so that you guys can take a screenshot, or if you're making a note to complete this, and then I'll take you to the next one. Yes, Jyoti, this is the value of closing stock. So what if there is no changes in the price? What will you do for the same situation? If there is no changes in the price, I'll record it at the same price. If there is reduction in the price, I'll record it. I'll record the reduction. Did I answer, Ishanya? And Hitler Gaming is saying no change, ignore. Wow, no change means ignore. They were walking on the road, some beggar comes and they ask, you don't have change. What do you do? Ignore. Is that what you're telling, Hitler? Hitler and all is watching our class. Oh my god. Hitler, how is it up there in hell? Oh, are you in heaven? Okay, okay. You retract your message, but I still would have read it. Okay, guys. Shall we go to the next one? You people have been asking me, do one more problem, sir. One more problem. Don't worry. Your wish is my command. Hmm. You are the prince. I am the genie. We will do this. Yeah, shall we do this? Question number 9. One more question on valuation of inventory. Just a moment. Okay, start reading the question. A trader prepared his accounts on 31st of March every year. Due to some unavoidable reasons, no stock taking could be possible till 15th April. Okay. Again, again, same thing, isn't it? Have a look. The inventory is taken as on what date? 15th of April. But what date ka inventory do you want? 31st of March. So are we going forward or are we going backward? Are we going forward or are we going backward? If it was in the class, all of you would have ran away from me because I'm coughing. My nose is blocked. I have a mild headache and cough. Oh my god. Huh. Tell me no. Is it forward or backward? Pretty obviously this is a backward question. Huh. I'm happy that you guys are giving right answers now. Okay, come on. Let us start. I'll copy paste the format if you guys don't mind. Okay, guys. They have given inventory as on 15th of April 2018. Today I would have to take one more break. It's become a little difficult. I'm finding it very difficult to sit for long. 50,000. So the physical inventory supplier later should be subtract because the customer didn't take the goods. Which one are you asking, Ishanya? Ishanya, I didn't understand. Which part are you asking? See, the inventory is with you. Your supplier has given you, your customer has not taken. The inventory is with you. If the value of the goods go little down, you will reduce it. If the value of the goods doesn't change, you will not do anything. The goods is with you. You have not given it to your customer. Your supplier gave it to you late. Okay, okay. I'll take that doubt little later. Who has Gautam, let us do whatever I have picked. I will definitely be helping you with those questions also if you want me to. Yeah, we can take it up in separately after the class. You send it to me on Telegram group. I'll definitely answer it to you. Huh? I'm not saying that I'll not answer, but not right now. Okay, Gautam. Okay, come on. Let's go ahead. 50,000 is a starting point on which the date. Okay, fine. Let's start reading. First adjustment. Sales, including cash sales, 10,000. So there is no distinction of cash sales. So whenever they give something like this, cash sales, you would have to ask. So what? No, they're telling there is cash sales of 10. So what? See, sales is sales, not at the end of the day. It doesn't really matter whether it is credit sales or cash sales. Sales means sales. So we'll be adjusting for 41,000. We'll be adjusting for 41,000. Do we have a separate treatment for cash sales? No, we don't. Do we have a separate treatment for cash sales? No, we don't really have it. Okay. Sales is, the question is backward. So what do we do to inflows? Minus. What do we do to outflows? Add. Inflows minus. Outflows add. Now sales is inflow or outflow? Sales is outflow. Sales is outflow. What is it that I would have to do? I would have to add. But I'll not jump and do this. Why? Okay, fine. I can do it. But I thought I'll take it along with sales return. Fine. If you'd have to do it separately, we can do it separately. Out. It is should be added. So what will I do? Add. Sales. Shall I write it here? At cost I would have to take. Sales at cost. How much is sales? 41,000. Minus. Do we know the profit percentage? Have they given it to us? Goods are sold by the trader at profit of 20% on sales. Profit percentage 20% on sales. So what will I do? Okay, now come on, let's do this. 41,000 minus 21%. Minus 20% gives 32,800. How much do we get? 32,800. 32,800. Okay, come on. Apurama, what else do we have after that? Okay, come on. Next one. Purchases. Again, purchases, mein, it doesn't really matter whether it is cash purchase or credit purchase. It doesn't have any impact only. Okay, how much is it? 5,034. You know, right? Purchases are inflows. Inflows should be minus because we are going backward. So what will I do? I'll write under the less items. Purchases. Okay, what do I do? Should I do 5,034 minus 20%? Should I do 5,034 minus 20%? No, I need not. Why? Purchases are always at cost, man. Purchases are already at cost. You need not do any special geometry for that. Just because you know 20%, don't deduct 20%. Huh? Thabo, everywhere I'll deduct. I know I'll put. No, don't do that. Huh? Very important. Next, sales return 1,000. Sales is outflow. Sales return is inflow. Sales return is inflow. How much? 1,000. So this is again I would have to take it at cost. Less salva. How much? 1,000. 20% of 1,000. How much do we get? 800. Sir, how are you so sure? I'm sure. This is easy, man. 1,000 minus 20% is 800. Next, on 31st, on 15th of March, goods of sale value 10,000 were sent on sale or return basis. It was sent on sale or return basis. Now tell me, are these goods 10,000 worth goods with you? Are these 10,000 worth goods with you? It is not with you. Is it with you? It is not with you. Whom does it belong to? It belongs to you. Who is the owner? You. But is it with you? No, it's not with you. Physically, is it there with you? No, it's not there. So here, when they give this 50,000 go down stock, does this 50,000 go down stock include the 10,000? No, not completely. You would have to read the question completely. Do you guys get that? Let's read. The period for approval is 4 weeks. Now, from 15th of April, sorry, 15th of March, if you say 4 weeks, that comes to 15th of April. So the person to whom you've given the goods, he has to accept them before 15th of April, or he has to return those goods before 15th of April. I repeat, the person to whom you send these goods on return or approval basis, he has to either accept and pay by 15th of April, or maximum or the last date before which he has to return is 15th of April. Do you guys get that? But in between May, we have 31st of March. That is the date on which we are finding the stock. Get that? Okay, come on. Let's go. He has returned 40% of the goods. He has returned 40% of the goods, approving the rest. Okay, now 40% is returned. Now entire 10,000 belongs to you. Do you have any doubt that entire 10,000 belongs to you or not? 10,000 mein two parts, 40%, 60%. 40% included in stock. Already included. 60% we would have to include now. 60% is not with us. It is there with him. It is there with him. They have given approving the rest. He has approved the rest. But when did he approve? 10th of April. So it is sale on what date? It is sale on 10th of April. As on 31st of March, is it sale? No. As on 31st of March, those goods belong to you. But is it with you? It is not with you. I'll explain it to you again. Entire 10,000 belongs to you. Entire 10,000 worth goods belongs to you. But are those goods with you? No. 40% of the goods is returned it to you. When it is returned it to you, those goods are there in your go down. When it is there in your go down, it is included in this 50,000. How much? 40%. Remaining 60% he has not returned. It's there with him. So it is your stock which is there with someone else, which you would have to include. This 60% is not included in that 50,000. Why? It is not there in your go down. He's not returned it to you. You get that? So what is it? It is to be added. It is to be added. I'll write here. Okay, how much? 10,000 may say 60% of the stock I would have to consider. You guys get that? How much would that come to? 6,000. But that has to be taken at cost. 10,000 is selling price. Have a look. Everything is at sales. So those goods would have been sent at sale value. Have a look. Have a look. They've given very clearly here. I'm not assuming. Sale value of 10,000. So sale value is 10,000. How much is the profit element? 20% on sales. So what will I do? I will close the bracket here. Minus 20%. Did you guys understand? 10,000 worth goods are sent on return or approval basis. Of that, 40% you have received. 60% you have not received. How much is 60%? 6,000. Of that 6,000, that 6,000 is selling price. We have to take it at cost. So 20% has to be deducted. So 6,000 minus 20%, 1,200 goes, it becomes 4,800. I'll show it you how. 10,000 into 60%, that gives me 6,000. I do minus 20%, that gives me 4,800. 4,800. This is technically the amount of goods that I should include. You guys get that? Yes or no? Ask me if you have not understood. Or if you have understood, tell no. Give me thumbs up, send me a smiley, dab your way out. Or send that one heart and all, blow it like this. Or send one beautiful smiling, something. You guys, okay, what else do we have? Then we have one more, last one. Acha, acha. Third done, fourth done. Shall we do fifth one? A trader had also received goods costing 8,000 in March for sale on consignment basis. Here you are consignee. Who are you? You are not consigner. Who are you? You are consignee in this case. You are consignee. Yeah, you have received the goods. Now, oh, thank you. So nice of you people. Ta-da. Peace. Okay. Now tell me, you have those goods with you. Do you? Consignment stock. You have those goods with you. Do you? The answer is yes. But does those goods or do those goods belong to you? Do those goods belong to you? Are you the owner? No, you are only agent. You are only agent. Those goods belong to someone else. Those goods belong to someone else. But you have wrongly included in your stock. It's there in your physical stock, but it doesn't belong to you. Now you tell me, what do I do? Add or subtract? Add or subtract? Those goods are consignment goods. You are not the owner. They belong to someone else. It's there with you, but it doesn't belong to you. It is there in your physical stock. What do I do? Add or subtract? Ownership is not with us. That's not our goods. So we'd have to subtract. We'd have to subtract. Yes. Akshay Naveen, correct. It's minus. Charan Charu, it's not add. It's subtract. We are consignee. We are not consigner. Okay. How much to subtract? Trader had also received. How much goods have we received? 8,000. Consignment basis. 20% of the goods have been already sold. So 8,000 20% is sold. So remaining 80% is what we should deal. Has been sold by 31st March and another 50% by 15th April. So totally 20% plus 50%. How much is sold? 70% is sold. 70% is sold. 100 measures 70%. If it goes, what's remaining? 30%. What's remaining? 30%. So 30% of the goods are remaining. That 30% we would have to eliminate. That 30% we would have to eliminate. So what will I do? Less. I'll write goods received on consignment. Consignment. How much is it? It is 8,000. 8,000. 8,000 means how much do I subtract? 20 and 50, 70% is already gone out. How much is there with me now? Remaining 30%. Remaining is 30%. So I'll write into 30%. Into 30%. Or I can do 8,000 minus 70%. That will also be correct. Instead of doing it like this, I can do or 8,000 minus 70%. That is also correct. You guys get that? How much does that come to? 8,000 into 30% or 8,000 minus 70%. That comes to 2,400. Yeah. See, 50% and 20% is sold. So I'll subtract 70% to get 30%. Or I'll straight away multiply with 30%. Either ways, it is the same. Now, oh my God, I forgot something. You guys didn't tell me. Sir, you forgot profit. I would have to eliminate no profit element. Why did you guys not tell me? Shall I deduct profit element or not now? Shall I deduct profit element or not? Shall I deduct profit element or not? Shall I deduct profit? Those are at selling price, no? Should I deduct? No one's texting. Everyone's wondering. No, I should not deduct. Why? Because here I am not making profit. To me, whatever the goods is sent is not my goods. Profit will be considered on the goods which belong to me. This is not my goods. On this, the profit is to the consigner, not to the consignee. Consignee is a mere agent. So what is it? 8,000 minus 30%, you get 2,400. Actually speaking, ashte, this problem is over. I told you no, the two different adjustments. I have done it including both. Okay, 141 to 144. Okay, here I would have to write the total is equal to sum. What is the answer? Plus 135. No, 136 model. 79,366. 79,366. Did you guys get it? 79,366. Did you understand? Did you understand? Did you understand? Copy this or take screenshot, whatever you feel like doing. Copy this or take screenshot, whatever you feel like doing. Then we'll go to another chapter. We'll start a new chapter. Yeah, Kushi, I'll explain the last adjustment again. With respect to consignment, you are a consignee here. The consigner has sent you goods. You have received those goods worth 8,000. Out of those 8,000, 20% and 50% is being sold. So totally 70% of the goods you have sold. Yeah, I can do 8,000 may say minus 70%, or I can do 8,000 into 30%. Either ways, what am I getting? 2,400. 2,400 rupees worth goods are there with you in your closing stock in the godown. 2,400 rupees worth goods are there with you in your godown. But those goods does not belong to you. You are only holding the possession of those goods. So that 2,400 is including 50,000, but it should not be the inventory that you will take for the purpose of final account. So what do? We deduct it. We deduct it. Did you understand? Anyone else has any question? Akshay is asking, sir, what will be the entry if we are the consignor? We'll see it in the consignment chapter, Akshay. Right now, we'll not see it. And if you are asking for the entry, consignee will not write any entry for the goods that is remaining with him. Consignee will not write any entry for the goods that is remaining with him. No, consignee will write the entry only for sale of goods. Yes, sir, but 50% will be sold. Yes, yes. Listen carefully. Krishna, very interesting point. Krishna is saying that, sir, but 50% of the goods are sold on 15th of April, which is after 31st March. You are right. But what we are doing is, now some part of the goods are sold before 31st March, some are sold after 31st March. As on 15th of April, we have 2,400 worth goods. That 2,400 is included in 50,000, so I am eliminating the 2,400. You get that? It is not my sale only. It's not my sale only. Did you understand, Krishna? Krishna, did you understand? Yeah, Gautam. We will do consignment accounting. You would have to wait. Okay. We'll finish this. Once we finish what's in hand, only then we can pick something else. If you pick something else without keeping down whatever you have in the hand, it will be troubleful. Yeah, you might drop everything and both will break. Tejaswini is asking, sir, I'm getting confused. Simple, ma. If they've given that inventory date, ayyo, it is simple. I don't know why you guys are getting confused. See, what have they told? No stock taking could be possible till 15th April. So when have they taken the stock taking? When have they done the stock verification? 15th of April. They've done it on 15th of April. We want the stock as on 10th of 31st of March. We are moving backwards in time. From 15th of April to 31st March is backward movement. So it is backward. So it is backward. It is backward. However, if you're moving forward, they will give that inventory was taken on 20th of March. From 20th of March, if you're going to 31st of March, you're going forward. From 15th of April, you're going to 31st of March, you're coming backward. Did you understand, Tejaswini? I hope you have. Then, Saran Charu, I don't know what is it that you didn't get yet. Anjana is saying, sir, shouldn't it be 8,000 minus 20% minus 50%? No, Anjana. See, they're not telling that 20% of the goods received on consignment was sold and the out of the remaining 50% is sold. Have they told that out of the remaining 50% is sold? They've told and another 50% is sold. So this 50% is of 8,000. It is not like 8,000 minus 20%, whatever we get, in that 50% is sold. It's not like that. It's not like that. It's like 20% and 50% is sold. Have they told 50% of the remaining stock is sold? If they would have told 50% of the remaining stock is sold, then we would have done 8,000 minus 20%. After that, we'll get something, then we'll do minus 50%. It is not same. It is not same. No, Saurabh is saying it's the same. No, no, no. Have a look. 8,000 minus 70% gives you 2,400. If I do 8,000 minus 20%, I get 6,400. There, if I do minus 50%, I get 3,200. It's different. It is different. What I'm trying to tell is this 20% as well as 50% should be taken on 8,000. This 20%, 50,000, 50% should be taken on 8,000. If you first to do 8,000 minus 20%, then you do minus 50%, you're doing minus 50% on the deducted amount, not on 8,000. But what I'm trying to tell is, you would have to do that 20% and 50% on 8,000. You would have to do it on 8,000. Why? They have not told that 50% of the remaining goods. If they would have mentioned in the question, and if instead of telling another 50%, if they would have told 50% of the remaining goods are sold, then out of that remaining, you would have subtracted 50%. Am I making sense? Yes. Next, I have one more question. Ishanya is asking, sir, how would we operate the same if we were a consignor? If we were a consignor, are those goods with us? No, those goods are not with us. We would have to include. We would have to add. We would have to add. It would be opposite. Get that? Here it is deducted because it is added by the consignor. Sinchana is asking, sir, then why ask us to determine inventory by physical stock? Should we not include the goods that we have received from consignor? We should not include Sanjana. Why? Sorry, Sinchana. Because those are not our goods. Now it's like this, ma. I'm going out. I'm going to my native and coming back. For some days, I'll give some goods to you and then tell keep it with you. I'll come back and collect it. Should you write it in your balance sheet, or should you just keep the possession? Should just keep the possession. You cannot include it in your stock. Now tell me, when will you include it in your stock? When will you write it in your balance sheet? When it belongs to you. Does it belong to you? No. You're only a caretaker. You're only having the possession. You're only having effective control. You don't have the ownership. So don't record it. Yeah. Those goods belong to the consignor. Consignor should record it. Consignee will not record them. Sinchana, I hope I answered your question. If you still didn't understand, you ask me, I'll answer it. Shall we go ahead? Respond. Okay. I think it's done. Okay. So we're going to the topics that I leave for you people to revise by yourself is first in, first out, last in, first out, Sam Bam. Don't waste too much time. Don't solve 5 questions, 6 questions, 7 questions and all on this. Solve one question and then chill, okay? The problem with you people is if you like something, it doesn't really matter whether it is important for exam or not. You solve a lot of questions on it. If you hate some topic, even if it is important for exam, you wouldn't solve it too many in number. So what I'm trying to tell is this is less probable. So solve only one problem. That's it. Chill. Yeah, Akshay Naveen. Sir, so if we have the ownership, we need to add, and not we need to subtract. It is not only about ownership. If you have the ownership and if you have it with you, nothing to do. If you have the ownership, but those goods are with someone else, we'd have to include it in your books. So we'd have to add. We will add because in the case of consignment, you are the owner, but the goods are not with you. You are the owner, but goods are not with you. Now listen, Akshay, you have some 10,000 rupees. 8,000 rupees is in your pocket. 2,000 rupees is in my pocket. So if someone asks you how much money do you have, what will you do? 8,000 what's in your pocket belongs to you. 2,000 what's in my pocket also belongs to you. So what will you do? You add that 2,000 to 8,000 what you have. Assume that other than the 2,000 what you gave me, I have some other money also with me. So the money that I have in my pocket minus 2,000 is my money. The money that I have in my pocket minus the money that you gave me is my money. With respect to you, the money that you have in your pocket is your money, plus the money that you have given me and it is in my pocket is also your money. Did I make sense, Akshay? Akshay. Okay. Come on. Do a problem on this, guys. So let's go to next one. We're starting a new topic, depreciation. Shall we start? What to expect in the exam from this chapter? Don't tell obviously questions, sir. What sort of questions? The questions will be on preparation of ledger accounts. The questions will be on preparation of ledger accounts. Or at times they might ask only for computation of depreciation. Yes, and they'll ask ledger accounts relating to assets, ledger accounts relating to depreciation account, provision for depreciation account, disposal account, etc. So these are the usual favorites. Okay, remember that. Then weightage of ICI. ICI has told that the weightage is 25 to 30% for chapter 2, 3, 4 and 5 together. Chapter 2 accounting process including rectification, 3 BRS, 4 valuation of inventory, 5 depreciation. All these chapters together it comes for 25 to 30% marks is what they're telling. You get that? But I can easily show you an attempt question paper where these chapters together had come for more than 30%. I can easily show. You guys will also find it if you search a little. So this is not very conclusive, but ICI has told it. We'll also keep it. Okay. Because you're so much stressed, sir. Oh, break for 10 minutes. Oh, Neeraj, so sweet of you, man. I'm not stressed up. My throat is dried up and I can't talk for long. Yeah, little sick. The body is little sick. Hmm. So I told you will keep at the end. What Gautam? I didn't understand what like keep at the end. Oh, depreciation. We have one more day extra. No, we'll do it now. Oh, don't worry. Thank you, Neeraj. That's sweet of you. So, but considering the previous examinations, based on whatever I have analyzed, it can maximum come for 10 to 12 marks. I'm not telling minimum. Remember my words. What did I tell? Maximum, guys, not minimum. Yeah, maximum it can come for 10 to 12 marks. Okay, perfect. Now, important topics to revise. What are the important topics that you need to revise? You need to revise the methods of depreciation and computation under each of the methods. You guys should be happy. Your seniors know when they read this chapter, they read annuity method, sinking fund method and all, provision for repairs method and all they read. But in your case it's nice, they've removed that 2 3 methods. Oh yeah. Oh, sweet of you, Jyoti. I'll do little and then I'll take a break. Okay. Yeah, what I was trying to tell you is basically um yeah, they've removed annuity method and the sinking fund method. It's been removed. It's not part of your syllabus. You guys need not read it. Yeah, if you're carrying a little older version of any of the materials, the material will have annuity method. The material will have sinking fund method. But don't break your head on it. Don't read it. You can royally skip it. You would have to only do straight line method, WDV method. Then you'll do production units method. Then machine hour rate method and production units. That's it. Only those methods you would have to do in the exam. Okay. Now, then the other things is you need to account for depreciation. When the asset is purchased, how do you account? When the asset is purchased at the beginning of the year, when the asset is purchased at the middle of the year, when the asset is sold at the beginning, when the asset is sold at the end of the year or in the middle of the year, how do you account all that? Revaluation of the asset, how to account for upward revaluation, how to account for downward revaluation of the asset, everything. And then how to account for disposal of the asset. When the asset is disposed, how do you account for the same? Done. Then whenever there is change in method of depreciation, assume that you are following straight line method of depreciation all this while, and now you're switching from straight line method to WDV method. Can you do that? The answer is yes, you can. How do you do that? Whether should you do it prospectively or should you do it retrospectively? All that we'll understand that. Done. Next, there is something called as useful life of the asset. You get that? Whenever you take an asset, we tell no useful life of the asset is 10 years, 5 years, something like that. So if that useful life changes, how do you account for it? Or you had expected a scrap value of 5,000 at the end of useful life. That scrap value is changed now. So how do you account for such change in the scrap value? So those are the important topics that you guys need to revise. Yeah. What is SYDM? I didn't understand. Janak? Okay. What about depreciation? Depreciation is a non-cash expenditure. So don't ever dream also, right? Depreciation account debit to cash account. Depreciation is non-cash expenditure. What is it? Non-cash expenditure. This is going to be tested when you read the chapter of cash flow statement. It is not part of cash flow. Okay. You will read this when you again come to CA Inter. This will be taught to you again. Depreciation is a non-cash expenditure. Okay. If things go well and you come there, I will be taking this chapter for you. I would love to teach you this chapter there. Okay. Last batch I took this chapter. If in case somebody else takes and they tell depreciation is a non-cash expenditure, or if they ask, please don't tell depreciation to cash account as journal entry. Yeah, they'll be very angry on you. Don't do that. So depreciation is non-cash expenditure. Okay. Oh, some of your disease method. Oh, nice, nice, nice. And what is it? Is depreciation an accounting policy or an accounting estimate? I asked you with respect to inventory, no? I asked you whether inventory is accounting policy or accounting estimate. All of you told accounting estimate. But valuation of inventory was accounting policy. But how about depreciation? Very important. Depreciation is accounting estimate. It is an accounting estimate, not a policy. It is an accounting estimate, not a policy. Now, you guys tell me, what is the difference between policy and estimate? When do we call it a policy or when do we call it an estimate? I will tell. I will tell. Now, I have to travel. I have to travel from Banshankari, where I live, to Jainagar. I would have to travel from Banshankari, that's where I live, to Jainagar. I have multiple ways to travel. Multiple ways to travel. I can travel by metro. I can travel by my own bike. I can take a car. I can take a cab. I can take an auto, or I can walk. I have so many options. I have so many options. All of them will lead me to the destination. All of them will lead me to the destination. What I prefer to do is my policy. I prefer to walk. I prefer to walk because the weather is really nice. Yeah, cool breeze. I'd love to walk. Yeah, if I say that, that's my policy. I'll say, no, who will walk for so long? I will ride my bike. Yeah, that's again my accounting policy. Or some of them might prefer, oh, who will ride, man? I will book a cab. That's also accounting policy. Few people will say, no, I'll take public transport. I'll go by BMTC or I'll go by metro. That is also accounting policy. These all are accounting policies. Now, what is accounting estimate? Now, you are at Jainagar. You call me. You call me. I'll hold my phone like this. Okay, I'll say, hi Janak, tell me. And then Janak will tell, sir, I'm in Jainagar, please come. I'll say, yes, I'll come. Janak will ask, sir, how much time do you want? I will tell 10 minutes. I will tell 10 minutes. Now, have I already come in 10 minutes? No. I'm expecting to reach in 10 minutes. I'm expecting to reach in 10 minutes. That 10 minutes is an estimate that I've done. 10 minutes is an estimate that I've done. How have I done 10 minutes? Based on the past. In the past, I've traveled from Banshankari to Jainagar several times. I know how much time has it taken then. I know what means of transport am I taking. I know what is the traffic that's there. So considering all that, I've told you an estimate of 10 minutes. I've told you an estimate of 10 minutes. Did you guys understand? So accounting estimate is based on the past experience. You tell something. You get that? Now depreciation is an estimate. Why? Now whenever you depreciate an asset, now I have this laptop and I'm depreciating this laptop. When I depreciate this laptop, some part of the laptop is it breaking and then going out? No, right? I'm saying that okay, fine. Depreciate 10% of the value of the laptop has decreased this year. Is it actual? No, it is just an estimate. I'm expecting the laptop to work for 10 years. My laptop cost is 70,000. So I'm telling depreciation is 7,000. Decrease in the value is 10%. It's just an expectation. It's just an expectation. Did you guys get this? So accounting for depreciation is accounting for accounting estimates. Whereas valuation of goodwill, valuation of inventory, valuation of fixed assets, all these are what? Accounting policies. Get that. Next, what are the reasons for depreciation? Wear and tear. You wear it, you tear it. Now I'm using my laptop. If I use my laptop, there will be decrease in the value. Correct or not? Every hour I use it, there will be decrease in the value because the parts are getting obsolete. The parts are getting used. Wear and tear. Next, passage of time. Now I'll say, I don't want to use my laptop, Papa. Laptop's value will come down. I will close my laptop, keep it in the locker. Still the value will decrease. Why? Passage of time. Time decreases the value of everything. Now I had another laptop. Yeah, Dell laptop. That was some very old one, 10 years old laptop. That 10 years old laptop, when it was bought, so I didn't buy it, someone else bought it. I bought it in second hand. Someone else might have bought it for like 50,000, 60,000. Today, its value is around 10,000 rupees. You get that? Even if I wouldn't have used it, the value is so much only. I used it very less. Just assume that I didn't use it much. Still, the value would come down. Why? Passage of time. Because of time, the value will come down. Because of time, the value will come down. Now, assume that I bought this phone. This is MI5. This was a flagship model when it was launched. 25,000 was the price. Highest phone for Xiaomi. Okay, when I bought this phone, assume it was in the box and I never opened it. Till today, if I didn't open it, will the value be still 25,000? No. There are better models available in the market for the same price now. You get that? So the price will come down even for the sake of passage of time. Next thing, obsolescence of technology. So when there is a better technology in the market, the goods of the older technology's value will come down. When there is a better technology in the market, the value of the old technology will come down. Now when LED TVs came, LCD TVs value reduced. When LCD TVs came, the normal big TVs value reduced. And now LED TVs value is more. Then OLED came. Then that value also decreased. Then 3D TVs came. OLED values reduced. So whenever the new technology comes, it will reduce the value of the previous technology. And then there are market changes. That's also needs to be considered. Then to be charged. Okay, when do we start charging depreciation? We start charging depreciation when the asset is ready to be put to use. Lot of you people read it as ready to be put to use. Lot of books, no, they just tell ready, what to say, put to use. Lot of books say only put to use. I'm telling you, it is not put to use. It is ready to be put to use. Now assume the asset is ready today for use, but you will use it after 2 months. Why? Today is not good day. Chanagila chi. Mangalwara, you should not start. Like we'll start in Magh Masa. Yeah, if you tell that, then what are you doing? Or we'll start in Chaitra Masa. You're delaying it by 3 months, 4 months. When you delay it, should we stop depreciation? No. The asset is ready to be used today. From today, you should start charging depreciation. It is being ready for use, not being used. It is being ready for use, not being used. Sir, why did this change come? Previously, there was accounting standard 6 depreciation. Now there is accounting standard 10 revised property, plant and equipment. Under the revised standard accounting standard 10 property, plant and equipment, this word has been included ready to be put use. So we would have to update ourselves and then read the latest thing. You get that, guys? Yeah. Akshay and Charan sent something, they deleted something. I don't know what did they send and what did they delete. Okay, what are the methods that we have? We have straight-line method or fixed installment method, return on value method or reducing balance method or diminishing balance method, sum of your digits method, production units method, machine hour rate method. So these are the methods of depreciation that we have. We would have to discuss it. We'll take a small break here. I'll just go clear my nose, have some hot water and come back because this water has already cooled down. I am sorry that I'm giving you a break. I can't help it. It's like completely blocked and my throat is very itchy. Okay, nothing that you people did wrong or something. Yeah, and nothing that I did wrong. I didn't have ice cream or something. I've given up on ice cream for long. It is just that once a day wherein I would need a little break. Yeah, sorry. I am sorry for the inconvenience that's being caused to you people, but please, okay, ಸ್ವಲ್ಪ adjust ಮಾಡ್ಕೊಳ್ಳಿ, please. Yeah, so that's it. When we come back, we'll do this depreciation part remaining. Okay, guys. Short break. Short break. 5 minutes. Okay, guys. Take a break. Can you hear me now? Drop a message or two so they can start. Can you hear me? Yes, let's get going. So that's the basic thing that we discussed. Now we'll quickly get into the methods of depreciation. So what are the methods of depreciation that we have? We have straight line method. Under straight line method, what would be the case? The amount of depreciation is same every year. The amount of depreciation is same every year. First year depreciation, second year depreciation is same. Now tell me, how do we compute depreciation under straight line method? SLM, depreciation, how do we compute? Anyone who can tell me? Depreciation is original cost minus scrap value divided by what? Whole divided by useful life of the asset. Is this how we do it? Is this how we do it? Isn't this the formula? Original cost minus scrap value divided by useful life. Now, what exactly do we mean by useful life in this context? Useful life. It's an accounting estimate. It's an accounting estimate. Now, when you look at an asset and then say, okay, this will survive for 10 years. How can you tell that it will survive for 10 years? Have you done some time travel, gone ahead in the future and then saw how exactly will it lost or how exactly will it destroyed and then came back in time and are you telling? No, it's a completely an accounting estimate. Then scrap value. Scrap value is not resale value. Scrap value is not resale value. Scrap value and residual value are different from resale value. Resale value is the price at which the asset can be sold during the life of the asset. Resale value or resale value is the price at which the asset can be sold during its useful life. But when we refer to the word scrap value, it is the value of the asset at the end of its useful life. At the end of the useful life, the purpose for which it was intended, if that purpose is over, at that point when you sell it, whatever the price at which you can sell, that becomes our scrap value. You get that? This is also an accounting estimate. This is also an accounting estimate. So depreciation is also an accounting estimate. This is important. Don't forget this. Okay, guys, don't forget this. So useful life, scrap value as well as depreciation is accounting estimate. And under straight line method, depreciation in year 1, depreciation in year 2, every year yearly depreciation will be same. Yearly depreciation will be constant and same. Okay, that and all you guys know. Next, WDV method. Can I call it WDV method? There are a lot of other names, guys. Return on value method or reducing balance method or diminishing balance method. I can call it with 2-3 names. Now tell me, how do we find depreciation under WDV method? You will tell, sir, return down value. It is easy. You will tell like this only, isn't it? You will tell, sir, return down value multiplied by depreciation percentage. This is what you will tell. But my question is, how do we find the depreciation percentage? Depreciation percentage is found like this. DEPN, depreciation percentage, is found as square root. I don't have the symbol here. I'll write here. Have a look. Depreciation is equal to nth root of. Have you guys came across this formula before? Nth root of residual value minus cost. Sorry, divided by cost. I don't know if you have come across this one. Have you? Have you at any point of time? Nth root of residual value divided by cost of the asset. I don't know if you have come across. That is how we find the value. Now, what exactly is residual value here? RV is nothing but scrap value. What is it? Scrap value. What is N? Number of years. Useful life. Done. Cost is the original cost of the asset. Done. So this is how we do it. This is how we do it. Done. Then under sum of your digits method, how do we identify the rate of depreciation? Anyone? Anyone? Sum of your digits method. We would have to identify the depreciable amount, meaning we will do the cost minus scrap value. That is the value on which you compute depreciation. This will be multiplied by remaining useful life at the beginning of the year. Okay, at the beginning of the year divided by sum of your digits. This is how we do that. How do we do it? Yes, cost minus scrap value multiplied by remaining useful life. Okay, you are right. You are right, Hitler. But you would have to tell this one word importantly. Remaining useful life at the beginning of the year, and the denominator is not total life. Denominator is sum of your digits. Now the question is, how do you find sum of your digits? Sum of your digits. How do you find sum of your digits? Sum of your digits is found as n multiplied by n plus 1 whole divided by 2. N into n plus 1 whole divided by 2, or few of your it as n plus 1 into n divided by 2. So that's how we find the sum of your digits. You get that? So there are like small problems on this. In fact, when CPT exam was there, no, previously the objective examination, lot of questions used to come from sum of your digits in comparison to other methods like straight line method and WDV method. The more questions were usually asked on this method only. Okay, but now it's almost like equal probability. Now they put in those questions with change in method of depreciation or revaluation based questions or asset disposal account based questions. Yes, even till now, if you say the examination may 2 to 3 times only has come depreciation, and they have not asked the detailed disposal. They've just told the asset purchase in the middle of their assets sold. Then they're like more than one asset, two assets or three assets will be there. One part will be sold, one asset is bought. Only such kind of questions have been asked. Done. But our material, ICA material as well as SS material has few very interesting questions like with provision, with disposal account, without disposal account. So those are little tricky ones. Please do them. Okay. Yeah, get used to them. Then we have then we have sum of your digits method over. No. Then we have production units method. If in case you get a question on sum of your digits method, no, this is where you do the mistake. Remember this. I've seen lot of them doing mistake here. They don't really write this as what? They don't really write this as beginning of the year. They just take randomly. Don't do that. That beginning of the year is tricky part. Okay, don't miss it. Don't miss it. Then production units method. Production units method may the useful life is measured not in terms of years. It is measured in terms of units. Now, I buy a machine. If I ask you how long will the machine last, you will tell sir 10 years. You will tell sir 15 years. You will tell 20 years. Something like that. But the asset can be dead in the span of 2 years only. Why? Now, when I buy a washing machine, I'll ask you how long will it last. You'll tell, sir, washing machine will come for 6 7 years. But what I'll do is 24 hours in the day I'm running the washing machine. I'm putting it in. I'm like taking everyone's clothes and then putting it in the washing machine. It's like not exclusively for my house, but for the entire area or entire apartment. When I do it that way, the machinery will not come for 5 years. It will die in the span of next 2 years because it has a capacity saying that okay, I can wash so many clothes. Beyond that clothes, even if you put so many clothes to wash in the span of 1 year, it will stop working. If you use once for say 2 hours in every week or something, it will come for 5 years, 6 years. If you use 20 hours every day, it will last for a year. You get that? So the useful life should be counted or based upon the what to say units which is manufactured from that asset. Done. So that is the basis for this method. So under this method, depreciation is found like this. Again, we go by depreciable amount topic. Okay, that is cost minus scrap value. We do cost minus scrap value and we multiply this by what? Okay. Production units during the year. Production or units produced during the year. I'll write in bracket. During the year. This will be divided by total life. Total life in units. We'll take the life of the asset in terms of units. We'll take the life of the assets in terms of units, and then we divide it by that. Now, example, one asset, using that asset, you can manufacture 1 lakh units. You can manufacture 1 lakh units. During the year, if you have manufactured 10,000 units, we do 10,000 by 1 lakh. That is 10% of the usage is over. So 10% of the assets value will become depreciation. You get that? And again, now we'll do machine hour rate method, which is exactly same. Machine hour rate method. This is exactly same as our production units. Under production units, useful life is measured in terms of units. Under machine hours, we measure the useful life in terms of hours. Now, time is the basis. Useful life is measured in terms of time. Time can be years, time can be months, time can be days, time can be hours. Hours is more precise. Hours is more precise. You get that? See, when you say 2 years, it doesn't matter how many hours are used in those 2 years. If you use it only for 1 hour every day, it might not come for 2 years. It might come for 4 years. If you use for 4 hours every day, it might not come for 2 years. It might come for 1 year. So it depends upon it. Now it does not depend upon how many years. It depends upon how many hours in every year. You get that? Now that's how we do it. Yes. So same thing. Whatever is there for production units, I'll paste it. But instead of doing units produced during the year, I'll write machine hours used during the year. I'll write machine hours during the year. During there, divided by total life in hours. Total life in hours. That's how we do it. And that's what we call the end of machine hour rate method and the types of depreciation that we could do. Sir, could you also do an asset disposal question? Uh, Not possible right now, but we'll do it at the end if we have time. Is that fine? Yeah, sir. Actually, the return on value method formula is, yeah, 1 minus. Did I not mention 1 minus? Oh, sorry. Did I forget? Oh, sorry. I've forgotten to write. You have to do 1 minus. 1 minus nth root of residual value divided by cost. Perfect. Yes, into 100. Sorry. I forgot to write 1 minus. Aditya, I forgot. Okay. So these are the methods of depreciation. Now what will we do? A quick concept revision. Tell me, come on, boys and girls. Tattan Tayali. Change in the method of depreciation. What is it? Is it change in accounting policy or change in accounting estimate? I want answers. Change in the method of depreciation. Change in the method of depreciation. Accounting policy change or accounting estimate change? Respond. I'll give you a count of 10. I'll only mark it if you guys don't tell. It is not change in accounting policy. It is change in accounting estimate. Change in the method of depreciation is change in accounting estimate. It is not change in accounting policy. It is not change in accounting policy. It is change in accounting estimate. Remember that. If there is change, then what do we do? Should we account it prospectively or retrospectively? Prospective or retrospective? Next question. Answer my next question. Should we account for such change in the prospective method or retrospective method? I'll mark. No one's answering. Prospective method. What method are we going to follow? Prospective. Now, few of you might have a question. Sir, what do you mean by prospective? What do you mean by retrospective? Now, in our firm, we have some 6-7 articled assistants. Now, assume that we increase the stipend of this articled assistants, like salary. Salary is given to employees, stipend is given to interns. Now, assume that we increase the stipend to 10,000 rupees. We increase the stipend to 10,000. When we increase the stipend to 10,000, we have two options, prospective, retrospective. If I say, now stipend is increased prospectively by 10,000 rupees, you know what will happen? From this month, from November 2020, all the articles in the firm will receive 10,000 rupees as stipend. All the articles in the firm will receive 10,000 rupees as stipend. However, if I tell retrospectively, increase it to 10,000. You know what does it mean? From the month they joined, they would be receiving 10,000. Meaning, assume that one guy joined in the month of January. One guy joined in the month of January. If I say retrospective increase of stipend to 10,000, I will not pay 10,000 for November. For the last few months, January to October, I might have paid 8,000 or 6,000 or 7,000. For those months also, I'll pay additional 3,000 or 4,000 now. I will compensate for those months also. So retrospective is changing from the beginning. Prospective is changing from now. Retrospective is changing from the beginning. Prospective is changing from now. When do we follow retrospective method? For change in accounting policy. For change in accounting policy, we would have to do retrospective method. For change in accounting estimate, we'll do prospective. Estimate means on the like you told you'll reach. I told no from Banshankari to Jayanagar. I told I'll come in 10 minutes. If I don't come in 10 minutes, what will I do? Should I go back to Banshankari and again start? Assume that I took 12 minutes. Should I go back to Banshankari and then start again, come in 10 minutes? No, not required. It is an estimate, what I told 10 minutes. Whereas, I'm starting from Jayanagar. I want to go to Banshankari. Sorry, from Banshankari, I want to go to Jayanagar. I have lot of methods to choose from. One of the method is gone. Then what is it I would have to do? I have to go back and then take another method. I thought I'll take auto. I took auto, but meanwhile auto broke down. Then I would have to change to bus. So that is change in accounting policy. You get that? Then you would have to do it from the scratch. You guys get that? I would have to go back and then change from the beginning. Yeah. Gautam, illustration number 10. Which chapter, Gautam? You 10. Send me the page number. You asked me the doubt. I'll answer it one to one, beta. Is that fine, Gautam? Now, change in useful life of the asset. You had expected the asset to last for 10 years. Asset died at the end of 8th year. Asset stopped working at the end of 8th year. Or you had expected the asset will work for 10 years. 15 years over, asset is still working. Now that change in that useful life, what is it? Is it accounting policy change or accounting estimate change? Is it accounting policy change or is it accounting estimate change? No one's answering. Is it time for me to answer? Shall I? Shall I? It is change in accounting estimate. Why? The useful life is also an estimate. Now when I tell the asset will last for 10 years, the asset will be listening, no, oh, 10 years is my lifetime. 10 years over, suddenly it will die. Is it like that? No. You get that? So it is not like it will be looking at the watch and then it will die. It is an accounting estimate. Again, whenever there is change, we'll again account it prospectively. Change in scrap value, it is expectation. You expect the asset to realize so much at the end of the useful life. Expected scrap value is also an accounting estimate. Such change also will be accounted prospectively. You get that? I've added one question on this change, prospective change. We will do that. Okay, guys? Shall we do question number 10? Are you guys with me? Shall we do question number 10? Mrs. Green Channel purchased the second-hand machinery on 1st of January 2015 for rupees 1,60,000. Overhauling and direction charges amounted to 40. So this 1,60,000, this 40, everything will be taken together. Everything will be taken together. So the cost of the asset that will record is 1,60,000 plus 40, 2 lakh. Done. Another machine was purchased on, okay, this is machinery number 2. This is machinery number 1. For rupees 80,000 on 1st of July 2015. In the first year only you purchased one machinery in January, one machinery in July. Okay. On 1st of July 2017. This is after 2 years. After 2 years, machinery installed on 1st of January 2015 was sold. Which was sold? First machine was sold for rupees 1 lakh. Another machinery was purchased for rupees 30,000. This is machinery number 3. So how many do we have? We have 3. 2 were purchased in 2015. The first was sold in 2017 and third one was purchased in 2017. Okay, then under the existing practice, company follows depreciation under 10% per annum original cost method. So they're following original cost method or SLM basis. However, from the year 2018, 2015, 16, 17, they're following straight line method. From 2018, they're changing to WDV method. Okay, and to charge depreciation at 15%. Fine. Let us do this. Here they've told you are required to prepare accounting. So we are following calendar here. What are we following? Because Nowhere they have mentioned 17, 18, 18, 19. They have not told that way. So we'll follow calendar year. Shall we follow calendar year? As if we have an option. Come on, let us go solve this question now. What have they asked? They want us to prepare machinery account. First they'll do working note, then we'll prepare machinery account. Question number 10. Okay. So what you do is they've asked for machinery account. Your answer in the beginning there should be machinery account. Yes, I'll write here machinery account. In the books of whom? Green channel. Okay. Then you'll have debit side. You'll have date column. You'll have particulars column. Then you'll have amount column. One amount column is sufficient. We don't need two amount columns. So do we have to follow what is a past journal folio? Not required, guys. Relax. Debit side is done. I'll copy paste it, make it my credit side. So that is my credit side. Date I'll reduce the size a little. Particulars I'll make it little big and reduce my amount column size. And this is my which side? Credit side. Yeah, so this is the answer that they've asked, machinery account. But I know that you cannot prepare machinery account without preparing working note. So working note you prepare it later. You first prepare working note, but in the answer paper, what should be visible on the front? On the front should be your ledger account. Okay, CULARS particulars. Okay, machine 1, HINE, machine 2. There are 3 machines. Okay, guys, totally, and we'll have total column also. And we'll have total, TOTAL, total. Okay, date I forgot. Date, one more column you want. Okay, the transaction starts on 1st of January 15. What happened on 1st of January 15? Purchased. Which are the chapters we are revising today? We are on the verge, ma. We will last 1 hour left and you are asking this question now. Can I write straight away 2 lakh? We'll do after we finish depreciation, we'll do bills of exchange. Yes, 2 lakh. And the total will be 2 lakh. Then, what happened in the same year? On 1st of July 2015. 1st of July 15. You purchased one more. So I'll write purchased. Which asset did you purchase? You purchased a second machinery. Second machinery is how much? Second machinery is, it was purchased for 80,000 rupees. So I'll write 80,000. Third machinery is 0. Third machinery I haven't purchased it. So what will be the total? Here it will be 80,000. Now we are going to the end of there. End of there is 31st December. There are no other transactions in this year. 31st of December 15. So what is that we should do? We should do less depreciation. Depreciation is done under SLM method 10%. Have a look. They have given very clearly provides depreciation at 10% on original cost method. So we will do depreciation 10% SLM. I'll write here only. 10% SLM. How much does the 10% SLM come to? Here it is 20,000, 2 lakh into 10%. Am I right? 2 lakh into 10%. How much is 2 lakh into 10%? That comes to 20,000. Can I write 20,000 here? Can I write 20,000, guys? How about machinery 2? Machinery 2, I will do 80,000 into 10%, but I will not do entire year. Why? Because the asset was purchased only in the middle of the year. It was purchased on 1st of July. So July, August, September, October, November, December. 5 in the brain, 1 in the hand. After 5, 6. So I'll do it for 6 months. 6 by 12 months. You guys get that? How much do you get? 80,000, 4,000. Depreciation will become 4,000. Machinery 3 is not yet purchased, so depreciation is 0. So how much will be depreciation here? Sum. 24,000 will be the depreciation. So now we'll go to the next year. 1st of January 2016. Balance. How much will be the balance? Is equal to plus this minus depreciation. We'll get 2,56,000. This is the balance. How much will be the value of the first asset? It will be 2 lakh minus 20,000. 2 lakh minus 20,000. How about here? It will be 80,000 minus 4,000, 76,000, and this will be 0. No doubt there. Are you guys getting this? You guys have become rock silent. Next, we'll go for next year depreciation. The next transaction is happening in 2017. So till then, no problem. In 2016, is there a problem? No. So in 2016, again, I'll go for depreciation entry. This is on 31st of December 2016. How much is depreciation? Here it is 20. This will become 8,000 in this case. This year, entire year depreciation. So depreciation comes to 28,000. So what will be the balance in that case? 0, 1, 117. Okay, tell me what will be the balance? Balance will be 1,80,000 minus 20, 1,60,000, 76 minus 8, 8,000. This will be still 0, and here it will be 2,56,000 minus 28. It will become 2,28,000. That shouldn't be a problem. Yeah, perfect. Next, during 2017, there's something happening. The first asset is sold as on what date? 1st of July. It is sold as on what date? Sold on 1st of July. So I'll do entry till 1st of July. So I'll write 1st of July 17. So on that date, I would have to compute depreciation. I'll write depreciation 10% SLM. How many months depreciation would I have to compute? I would have to do 20,000. That's for an entire year. How many months depreciation? January, February, March, April, May, June, July. Sorry, May, June only. July is not counted. So 5 in the head, 1 in the hand. After 5, 6. So 6 months. I have to do 6 by 12. 6 by 12 months. How much do I get? Depreciation that I'll get will be 10,000. Will I compute depreciation on the second asset? No. Why? The second asset is still held. It is not sold. Third asset is not yet been bought. You get that? So this will be equal to 10,000 rupees. Next, 1,60,000 was there. 1,60,000 was the value. Out of 1,60,000 value, how much is sold? I'm just showing you a little marking. Okay, out of 1,60,000, 10,000 is the depreciation. So the value will be 1,50,000. But what is the selling price? Selling price is 1 lakh. Now concentrate. Okay, selling price is 1 lakh. Cost of asset sold. This asset should become 0 here. This asset should become 0. If it have to become 0, 1 lakh 10 is already subtracted. I would have to subtract 1 lakh 50. I would have to subtract 1 lakh 50. If I subtract 1 lakh 50, it will become 0. No, come on, concentrate here. Right. What is the cost of assets sold? 1 lakh 50,000. What is the selling price? 1 lakh. Okay. Cost price is 1 lakh 50. Selling price is 1 lakh. Now you tell me what is more. What is more? Selling price is lesser than cost price. So there is eventually loss. How much of loss? 50,000 rupees loss. 50,000 rupees there is loss. You guys understood? I need not write it, but I am just telling you what will be the journal entry in this case. Cash account. How much cash did you receive? You received cash of 1 lakh. Okay. There is loss of 50,000. To the extent of loss of 50,000, I would have to debit loss. So I'll write P and L. P and L account debit. How much is the loss? 50,000. And the asset is going out. When the asset is going out, I would have to credit it, isn't it? So I'll write to machine account. How much? 1,50,000. Guys get that? So this is the journal entry. This is my selling price. This is my loss. And this is my cost price. If there was profit in this question, selling price would have been more. P&L account would have become credit. Okay, guys. Okay. Understood. Let us go ahead. So this asset would become 0. I will write here 1,50,000. Here also I will write 1,50,000. It is to be deducted. Perfect. Then what else is happening on this date? On the same date, you have purchased a new asset. Yeah, they have given. Purchased asset number 3. Have a look. Another machine amounted rupees 30,000 was purchased and installed on 30th September. Okay, sorry, 30th September. For what price? 30,000. So this is not there. There's nothing here. There's nothing here. There's nothing here. Here it is 30,000. So I'll do addition also here 30,000. Understood? It doesn't really matter. If it is sold on credit, you will write the name of that party here. Whoever is supposed to pay you money, will write the name of that party. Understood? Understood, Praveen? Okay. Now we would have to go for depreciation. Shall we go for depreciation now? 31st December 17. Depreciation 10% SLM. Depreciation would not be computed on the first asset. Why? The first asset is sold. Asset is only not there. Who will charge depreciation? Depreciation has to be computed on machinery 2. Machinery 2, how much will be depreciation? 8,000. It is used for entire year. Am I right? How about machinery 3? Machinery 3, the depreciation will be computed for 1 second. Stay. I would have to increase my box size. Insert. One last time. Okay, guys. How did I charge depreciation on this 30,000? I'll do 30,000 multiplied by 10% multiplied by how many months did you use? You bought it only end of September. September also is not counted. October, November, December. Only 3 months. 3 by 12. How much do you get? 30,000 into 10% into 3 divided by 12. That is 750 rupees. Am I right? 30,000 into 10% into 3 by 12. Yes, that is 750. 750 rupees. Now tell me how much will be the depreciation? Total depreciation 8,750. Okay, now let us go for the end of the year. This is end of this year. Now next year when there is change in method of depreciation and we're done with this problem. Yes, I'll go to 1st of January 2018. Balance. How much is it here? This is 1,60,000 is there. From the 10,000 you charge a depreciation. Balance 1,50,000 is the cost of the asset sold. It should become 0. Done. How about here? 68,000 was the value. From that you charged 8,000 depreciation. If I subtract it, it will come to 60,000. So what will be here? 30,000 minus 750. You get 29,250. 30,000 minus 750, 29,250. How about here? Here either I can take sum of these two, or I can do it from the beginning. Whatever is that? What is that? 2 lakh 28,000 minus 10,000 minus 1 lakh 50 plus 30 minus 8,150. Either ways I'll get this. Okay. Now they're saying that they're changing the method of depreciation from SLM to WDV. Have a look. From the year 2018, we adopt WDV method at depreciation at 15%. That's it. So here I'll do 31st 12 18 less depreciation, but this time it's not 10% SLM, it is 15% WDV. Do you guys get it? In fact, instead of solving the entire problem, it will be easier for me. I can show the answer to you and then explain this comes like this comes like this. But I'm preferring to do, if I'm only preferring to do, just imagine whether you guys should chill and then just look at the answers or you would have to solve it. Think, okay. 9,000 here. How about here? 29,250 multiplied by 15%. That gives 4,388. How much is total depreciation? It comes to 13,388. That's it. Now, end of the year. Now, what is next year? 1st of 11, 19. There, the balance would be here, it will be 0. Here, it will be 60,000. Here, it will be 29,250 minus 4,388 is equal to sum. That's it. We're done. This is the problem. What they'd asked us to do. If you guys can do problems like this, I'm very happy. Yeah, that's expected in the examination. If you guys can do it, very, very happy. Quite impressed. I'm showing it so that you can have a quick copy if you want to. See here, till here I followed SLM. Straight line method. Whereas, how about here? We're following, ouch. WDV method. Did this make sense? Did you guys understand? Once you do working note like this now, it will become so easy for you to do the rest of the problem. Yeah, this working note is part of the exam. I didn't do this like just like that to show off. Yeah, this working note is part of the examination answer. Without working this working note, if you do the answer ledger account, there's no marks for it. You have to do this working note. Yes. Second question is 51,000. Is there anything wrong, guys? 76 minus 8, 68. Balance for machinery 2 is 51,000. How come? What have they told? Secondary machineries purchased for 80,000. 80,000. First year depreciation is correct, no? 10% for 6 months. 4,000. It comes to 76. Second year depreciation is 8,000. Second machinery 8, 76 minus 8. Hey, what's wrong? What's wrong? What's wrong? I didn't understand. Oh, I've written that. Oh, sorry, sorry. Sorry. My bad, my bad. Corrected it, corrected it. I didn't put the formula. I blindly typed it. Okay, done. Shall I do the ledger account now? Sorry, issues. I forgot. Not intentional. I've corrected it. Shall I go for the Shall I go for the ledger account now? Yes. In the ledger account, what is it I would have to do? Purchase. For the asset purchase, the journal entry is machinery account debit to cash. So this is happening on 1st of January 15. So I will write to cash. If you have purchased it by bank, you can write to bank account. Amount will be 2 lakhs. You purchase the asset for 2 lakh rupees. That is machinery 1. Then this transaction is done. This first transaction is done. Now I'm going to the second transaction. On 1st of July 2015, again you're purchasing another asset. So I'll write here, same thing. 1st of July. 1st of July 15, again to cash account. This is equal to 80,000 rupees. Okay, second asset is also purchased. Now we'll go for depreciation. Depreciation is on 31st December 15. Why? Depreciation journal entry, depreciation account debit to machinery account. Depreciation is an expense debit, machinery is an asset decreasing credit. So in machinery account, I would have to write by depreciation. How much is the amount of depreciation? First year, the depreciation amount is 80,000 rupees. Sorry, no, 24,000 rupees. I have written 24,000. That's it. I'm done with year 1. Let me take the totals now. So how much will I get? I'll get 2,80,000 here. Okay, now what will I do? I will do the balance carried on here is equal to this 2,80,000 minus this one 2,56,000. What is 2,56,000? By balance carried on. This is again on 31st of December. Have a look. Have a look. Have I done the same thing here? Have I got the same answer here? 2,56,000. So 2,56,000. Same answer. Done. Come on, let us go. The moment I have done balance carried on there, here on 1st of January 2016, I would have to write to balance brought down. You get that? How much is balance brought down? 2,56,000. So we're done with this transaction. Now we have less depreciation on 31st of December. So I'll write 31st of December less depreciation. Have a look. But how much is the depreciation in this case? Second year mein the depreciation amount is 28,000. So I've selected 28,000. That's it. I'm done. You guys got it? I hope you did. Now I would have to identify the balance carried on. So let me write balance carried on. Okay. How much will it be? That will be 2 lakh 56, 2 lakh 56, and balance carried on will become 2 lakh 28. Check what is it here. Is it 2 lakh 28 here as well? Yes, it's 2 lakh 28 here as well. You get that? Now, firstly 10,000 depreciation, then sale 1 lakh 50, then 30,000 purchase, then depreciation. So many things to do. Oh my god. Don't worry. After that, one more year and we're done. 1st of January 17. 2 lakh 28,000 opening balance. Charan, screen is blur. You would have to check the video quality, man. Here it's being streamed perfectly. Sorry to say that, but that's the case. 1st of July 17. What am I doing? I'm charging depreciation on which asset? On the first asset only. Okay. How much is the depreciation on the first asset? 10,000. I've charged 10,000 depreciation. Then there is sale of the asset. For that, I have written journal entry already. Have a look. What is the journal entry? Cash account debit, P&L account debit to machinery. In machinery, I would have to write buy cash, buy P&L. Buy cash, buy P&L. 1 lakh and 50,000. Have a look. Buy cash account, buy P&L account. P&L account for loss. Okay. How much is the cash received? 1 lakh. How much is the P&L account? 50,000. So we're done with this. We're done with this sale also. Now there is purchase on 30th of September. Let me write purchase entry 30,000 rupees. 30th of September. 30th of September there is purchase 30,000 rupees. So I'll write 30,000 rupees. Perfect. 30,000 ka you made purchase. These transactions are also on the same date. Done. After that 30,000 rupees purchase, what are they doing? Last one, 31st of December, there is depreciation entry. Come on, let us also do 31st of December depreciation entry. But I'll write 31st of December 2017. Okay, how much is by depreciation? In this case, depreciation amount is 8,750. Am I right? Because that first asset is sold, depreciation is only on the second and third asset. Then we would have to go for balance carried on. Okay, guys. Next, I'll write balance carried on now. 31st of December 2017. Total from where to where? Entire thing 2 lakh 28 plus 30, 2 lakh 58,000 will get total. 2 lakh 49,250 is the balance carried on. Have a look here. Oh, we have 89,250. What did we miss? Minus some. You get 89,250 as the balance carried on here. Have a look here. Here also it's 89,250. So it's perfect. Next year ka depreciation 13,338 if I write. I am done. I am done with this problem. I need one more line. Just one more line. 1st of January 2018. Two balance brought down. How much do we get? Balance brought down. 89,250. Done. Now I'm going for depreciation. What date? 31st of December 2017. I'll make it 2018 now. Depreciation is how much? Depreciation is 13,388. This is under WDV method. We're doing retrospective change or prospective change. I don't know. I didn't hear it from you people. I assume you told prospective. That's it. This is 89,250 minus 13,338. That's it. Balance carried on. So they've asked us to do the ledger account. Here is the machinery account that they had asked us, and on the right is my working note. You guys get that? So I'll show the working note for once if you want to take a screenshot. Okay, working note is here. I hope this is visible. Done. I hope that makes some sense. Now I'm going to show you the machinery account. So this is my machinery account. Does this serve the purpose, guys? Where have I kept my bottle? No, I don't have it. I didn't get it here. 89,250 is in the previous year. Gautam, I'll do it separately, man. I can't do it now, no, in the middle of the class. I'll answer that doubt to you one to one, Gautam. Yes, I hope you guys are done. Can I go to the next one? Can I go ahead? Give me a thumbs up. Give me a yes. I'll take you guys ahead. So there's one more question. This again, sale of a truck, purchase of a truck. There are like 10 trucks of rupees 45 lakh each. One of the truck is sold and one of the truck is destroyed and insurance claim is received. Just let me know if I should do this. Tanushri, this question is only like we start with SLM, we end with WDV. It can be like we start with WDV, then change to SLM. Possible. Good to go. Yes, yes. Dabbing everyone. Should I do this question also, or can I leave this on you people? Should I do this question also? Is my question. I'm asking you a question. Should I do this question also? Or can I leave this question on you people? Can I leave this question on you people? Will you guys do this question? Wow, nice. Very sweet of you people to say that you will do this question. Yeah. Now we'll head into accounting special transactions. Yeah. Bills of exchange. Shall we start with bills of exchange? No, sir. No, don't do types. Okay, do that as homework, guys. Do this question as homework. Which one? Do this question as homework. Now we're doing accounting for special transaction. Bills of exchange. Shall we do bills of exchange? Shall we start with bills of exchange? Shall we? Yes. Give me a moment. Just be reading this. Be reading the screen. I'll just get some water. Just go on reading the screen. I'm back. Okay, now we're starting with chapter 6, that is accounting for special transactions. There are a lot of units in this one, so we're starting with the first one, that is bills of exchange. Yeah, the chapter that you people were asking for yesterday. Yeah, note, always read this chapter before you do average rate account current chapter. Okay, a lot of them are very impulsive. They jump on to average rate account current chapter because it's easy, but without doing bills of exchange chapter, you should not do average rate account current. That's my understanding, or that's how I see it. Because whenever you see average due date or account current as a chapter, everywhere you would be using that bill date, due date, maturity date, everything. But the bill date, due date, maturity concept, or what exactly is a bill concept, is learned in bills of exchange chapter. Without knowing what exactly is a bill, how can you do average due date or account current? That's my question. You get that? So the syllabus is designed in a very beautiful way, and it's been put across in the syllabus copy also in a very beautiful way. So all you guys need to do is you have to stick to the schedule and then do it in the same order. Don't mess up the order, because it will actually it's a complete mess, guys. Accounts is not something that you can read random chapters at once. Okay, you have to do it in the order. Yeah, so that's my personal belief. Okay, then next, what to expect from this chapter? You can expect questions on determination of due date, maturity date. Like they'll give few dates and they want you to find out what is the due date for this particular bill, or what exactly is the maturity date for this particular bill. That sort of a questions can come. Or they can ask you to pass accounting entries from various perspectives. That is, from the perspective of the drawer, from the perspective of the drawee, or from the perspective of the endorsee, under various circumstances. Yeah, various circumstances, like in the case of retirement of a bill, in the case of renewal of a bill, in the case of accommodation of a bill, or in the cases where the bill is discounted, or in the cases where the bill is endorsed. Yeah, all these cases mean different parties books they can ask you entries. Like a bill is discounted but dishonored, a bill is endorsed but dishonored, a bill is retired and later, what do you say, the money is being received, or it is renewed and on the renewed date it is getting dishonored, and then the bad debts will arise. So such a things. Yeah, those things is what we're trying to learn from here. Okay, then weightage, 15 to 20% of the marks is being expected from entire chapter 6. Chapter 6 will include bills of exchange, goods sent on return or approval, consignment, average rate, account current. All the 5 topics together, there is 15 to 20% marks. You get that? Based on the previous examination patterns, we can expect up to 8 marks from this chapter. How much can we expect? 8 marks, and that 8 is maximum. Okay guys, remember. Now don't tell in the exam, sir, it came only for 6 marks. I'm telling maximum 8 marks. And I'm not giving you any minimum assurance. Okay, maximum it can come for 8 marks from this chapter. And important topics that you need to revise is types of bills. What are the types of bills that are there? And how to determine the due date and maturity date. Who's the drawer, who's the drawee, who's the payer, who's the payee, who's endorser, who's endorsee. All these are important. Again, the accounting entries under various circumstances are to be revised by you people. As to what is the entries when the discounting is done with the banker, what is the entry when it is endorsed to the endorsed to the creditor, or retirement, renewal, accommodation, dishonoring, and bad debts. In each of the circumstances you would have to see the accounting entries. Perfect. Come on, let's go ahead. What exactly is bill of exchange? Yes, what is a bill of exchange? What is a bill of exchange? What is a bill of exchange? Shall I tell? So there are two people. Okay, this guy is selling goods to this guy. Yeah, this guy has to pay money to this guy, but the buyer doesn't have money. He will say that he'll pay the money later. When he says that he pays the money later, the seller says okay. But later, when the seller asks the buyer, will you pay? Then the buyer will not even say hi, how are you. Instead, the buyer will tell, hi, who are you? In that case, the seller might cry. Just to ensure that this doesn't happen, along with the goods, the seller will send one document, and the buyer will sign it, and then he'll send it back. So this document which is prepared by the seller, signed by the buyer on the credit sale of goods, is called as bill of exchange. What is it? The document which is prepared by the seller, signed by the buyer, and returned to the seller. Seller will hold it with him, and the buyer will sign it. And the buyer will send it back. So this document on which this document which is prepared by the seller, signed by the buyer on the credit sale of goods is called as bill of exchange. What is it? The document which is prepared by the seller, signed by the buyer, and returned to the seller. Seller will hold it with him, till the time the buyer pays the money. Later one fine day, if the buyer does nakra, who are you and all, if he says, what will you do? You show that bill and then say, it's you who signed this. You have told me that you will pay. You would have to pay. You get that? So a bill of exchange is an unconditional order. What exactly is it? It is an unconditional order. Okay, concentrate. Bill of exchange. Yes, business instrument in writing. It's an unconditional order. I'll tell you a few important terms that you need to remember. Unconditional order. What do you mean unconditional order? Now, I am a seller. I give the document to you for you to sign. Can you change certain terms? That can you change the date in it when you sign? Can you change the amount? Can you change any clause? No, you can't change anything. You would have to shut up and sign. You would have to shut up and sign. That's like that. It's basically I am not requesting you to sign. I am ordering you to sign it. I am ordering you to sign it. And there are no conditions. You cannot say, I will sign if you change this. I will sign if you do this. No conditions. No conditions can be placed by the buyer. Buyer has to summa sign it. That's an unconditional order. Made by whom? Made by seller. Made by seller. Seller has another name in this case. Seller is preparing this document, so it's called as drawer. Seller is preparing this document is called as drawer. There's one more name to him. I'll tell you later. Okay. Made by seller. Accepted by whom? Buyer. Buyer is the person who's receiving the document now. Buyer will receive the document and then sign now. So when he receives the document, what is it called as? He is calling the document. Is kolodu you say in Kannada, like Lena is kolodu. So is kolodu E, draw E. So whoever is receiving will always have the word EE in their name. Whoever is receiving will always have the name EE in their name. Drawer, drawee. Payer, payee. Okay. Next, then you have something called as endorser, endorsee. So in every case, whenever the word EE is there, transferor, transferee. Whenever the word E is there, it means that person is receiving. You get that? Aditya, you're telling maker. Maker comes in the case of promissory note. Maker doesn't come in bills of exchange. Maker is a word given in promissory note concept. Okay, Aditya? Okay, what is bill of exchange? It is an unconditional order made by the seller, accepted by the buyer. Okay, why? To pay money to seller or holder of the instrument. Okay, why does he sign? He signs to accept that he has to pay money, and he agrees to pay the money to the seller, the person who sold the goods to him, or the holder of the instrument. Now, I am the person who sold the goods to you. I gave the document, you signed it. Should I collect the money? Not necessarily. I can give the document to my banker and then ask him to collect money from you. I can give the document to my friend and then ask him to collect money from you. I can give it to anyone. So it is either to the seller or to the holder of the instrument. Whoever holds the document, they can collect the money. You get that? Now, the buyer, on that day, the buyer has to pay the money. Buyer has to pay the money. So buyer is also called as payer because he only has to pay. You get that? Whereas seller has to receive money. Is kolodu. I told you, no, whenever you're receiving, you should write E. So E. I'm is calling the money. Pay. So the names that are there to the seller is seller, drawer, and payee are same. Buyer, drawee, and payer are same. Buyer, drawee, and payer are same. Seller, drawer, and payee are same. Did you guys get this? And this is the definition of bill of exchange. This is the definition of bill of exchange. What is it? It is an unconditional order made by the seller, accepted by the buyer to pay the money to seller or holder of the instrument. Here, I have used one beautiful word, holder of the instrument, meaning it need not be paid to the person in whose name the bill is raised. Whoever holds the document will get the money. Whoever holds the document will get the money. So that's the reason we call bill of exchange is a negotiable instrument. Negotiable instrument. What do you mean by the word negotiable instrument? Negotiable instrument means transferable. What do you mean by the word negotiable? It is transferable. Either I can hold it or I can give to anyone. It is transferable. That is the beautiful policy or beautiful point of payee can be the last holder. Yeah, yeah. Payee need not be the seller. Payee can be seller or can be someone else. Payee can be seller or someone else. You get that? So this is bill of exchange. Did you guys get this? But the same is not with respect to promissory note. What is promissory note? What is promissory note? Promissory note is a promise. Now I'll explain. Come here. Do you know who are the parties involved here? Seller, buyer, drawer, drawee, all those. Payer, payee. I hope you're clear there. Okay. I'll explain these concepts to you, but before that, let me just take you to promissory note. Promissory note, what will happen is there is again the goods are sent. After the goods are sent, this guy is the seller, this guy is the buyer. In the case of a bill of exchange, seller will prepare a document, send it to the buyer will sign it and then sell. In the case of promissory note, buyer will only prepare a document, sign it and then send it to the seller. It is not like seller has prepared and buyer has signed. Buyer only will prepare and then send it. So it is not an order. You cannot order yourself, no. You make a promise. You make a promise. So when the seller is preparing the document, buyer is selling. Stop there. It's okay. You don't prepare anything. You don't order me. I will only make a promise. So he'll take one paper and he'll only write saying that yes, I promise to pay you so much. I promise and then I give it to you. You get that? That is promissory note. So promissory note is a promise. It's a promise. Made by whom? Made by buyer. Buyer is also called as maker or payer. You only should pay, isn't it? So maker or payer. Buyer, maker, payer. Okay. Hand it over to seller or payee. The person is going to receive money. Okay. And is it transferable? Is it transferable? To pay money on an agreed date or after agreed period. You get that? Now tell me. Promissory note. Is it a negotiable instrument? Promissory note. Is it a negotiable instrument? Answer. Guys, I want answer. I want answer. Is promissory note a negotiable instrument? Is promissory note a negotiable instrument? No one's responding. Respond, guys. Yes. Okay, fine. I'll not tell that. I'll tell I'll not tell it is not a negotiable instrument. I'll tell bearer promissory notes cannot be issued. Now, if I hold a bill of exchange, whom does it belong to? Me. If you hold a bill of exchange, whom does it belong to you? We are able to transfer it. But promissory notes cannot be bearer instruments. We cannot transfer it that way. Who stops us? RBI, Reserve Bank of India, Section 13 very clearly says that bearer promissory notes cannot be issued by individuals. Bearer promissory notes can be issued only and only by RBI. If you have a currency note in your pocket, that 10 rupees note or 100 rupees note, it's a promissory note because there is a promise made by the RBI governor saying that the holder of this document will receive 100 rupees worth value of anything. So that is basically a promissory note. So if promissory notes are allowed by bearer, no, then everywhere, wherever you go, you will write in one paper, I promise to pay so much and then I give. That's it. Simple. Everyone manufactures their own currency notes. So promissory notes cannot be issued. Bearer promissory notes cannot be issued. Whenever I issue a promissory note, I would have to mention the name of the person very clearly. And it belongs to only that person. It cannot be transferred from one person to another. So promissory note cannot be transferred. person specific and cannot be transferred. This again examiner's favorite, guys. Kind of questions come from here. Difference between what is a bill of exchange and promissory note. You have to write all this. Okay, guys. Yeah. Amount cannot be made payable to a bearer of the instrument as it is barred by RBI Act. Yeah, yeah, perfect. Okay, done, done. Then we'd have to discuss few more things. Important terms: date of drawing, date of acceptance, bill date, due date, maturity date. What is date of drawings? The date on which this bill is drawn. The date on which the bill is prepared. By whom? By the seller. The date on which bill is prepared by the seller is date of drawing. The date on which bill is prepared by the seller. It is not the date on which the seller sees. Sorry, it is the date on which the bill is prepared by the seller is date of drawing, not the date on which the buyer will see or sign. Buyer seeing, buyer signing is has nothing to do with date of drawing. Date of drawing means the date on which the bill is prepared. What is date of acceptance? Date of acceptance is the date on which the buyer sees it and signs it. The buyer sees it and then signs it. That becomes date of acceptance. Done. What is bill date? What is bill date? Now, which is bill date? Is bill date date of drawing or date of acceptance? Is the bill date of drawing or date of acceptance? Is the bill date of drawing or date of acceptance? Anyone with answers? Is the bill date of drawing or date of acceptance? Answers. Date of drawing. Date on which drafted by seller. Date of acceptance. Date on which buyer signs the bill. Date of drawing? Yes, very good. Depends. Now, date of drawing. Sorry, bill date. Bill date depends on the type of bill. Depends upon the type of bill. What is it? If bill is bill after date. If it is bill after date, then what is it? Respond no. Then if bill is bill after sight. Tell me, if the bill is bill after date, then what is the bill date? If it is bill after date, yes, very good. If it is bill after date, it is bill after date, bill date is date of drawing. However, if it is bill after sight, then bill date is date of acceptance. Date of acceptance. Now, if you say bill after date, the date on which the bill is drawn, from that date only you start counting the days. However, if you call it a bill after sight, it becomes valid. It becomes a bill of exchange only when the buyer sees it. Till the time buyer doesn't see, it's still a paper. It is not a bill of exchange. You get that? That is the difference. Now, next thing that I have is due date and maturity date. I would have to explain what is due date, and what is maturity date. What is due date? What is due date? Date on which amount is due for payment. You get that? Date on which the date is due, what to say, the bill is due for payment. How do we find due date? If bill is specific day bill, then such a day will be due date. Next, if bill is specific period bill, then what do you do? Then due date is equal to bill date plus bill period. Did you understand? Lot of us will initially jump and then say due date means bill date plus bill period. Not necessarily. Due date means the date on which the amount is due for payment. Due date is the date on which amount is due for payment. Now, there can be two types of bills. One, bill with specific date. Second one, bill with specific period. What do you mean by bill with specific date? On a bill with specific date, or say specific date bill, it's specific day bill, specific date. So on the bill I've written what date the bill will become due. On the paper only I've written, okay, due for payment on 10th of April, due for payment on 1st of December. I've written the date. When I write the date clearly, that date itself will become due date. That date itself will become due date. I don't write 1st of December. I don't write 10th of April. I'll write bill is due for payment after 10 days, after 30 days, after 2 months. I'll write like that. I'll write a specific period. See, when I have to pay you money, I can either tell I'll pay you on 10th of December, or I can either tell I'll pay you after 15 days. I'll pay you after 15 days. If I tell that I'll pay after 15 days, it is bill for a specific period. If I tell the date, if I tell I'll pay you 15th December only, I will tell you the date correctly. It becomes specific date bill. Did you understand the difference between specific date bill and specific period bill? Did you guys understand the difference between specific date bill and specific period bill? If I mention the period, saying that at the end of this period I'll pay, it will become a specific period bill. If I mention the date on which I'm supposed to pay, that will become a specific date bill. If the date is mentioned in the bill, that date itself is due date. If the date is not mentioned, if I mention the period, then the due date is computed as bill date plus bill period. Did you guys get that? Now, maturity date. What is maturity date? See, a lot of you get this wrong, okay, guys? So, I'm mentioning this to you a little stressed way. So, what is maturity date? Date when bill matures and payment has to be made. Payment has to be made or settlement has to be made. So, what is maturity date? If bill is specific date bill, if the bill is a specific date bill, I mentioned in the bill that this is the date of what I say maturity. If I mentioned that, then that's the maturity date. Such a date is maturity date. Such a date will be maturity date. However, if the bill is a specific period bill, then what do we do? Then maturity date is bill date plus bill period plus 3 grace days. Do you guys get that? Yeah, bill date. I'll take bill date. You get that? Yeah. Now, due date is, you should see two types. The one, bill with specific date. Second one, bill with specific period. If it is a bill with specific date, that date mentioned is only due date. If it is a specific period bill, then I'll add that bill period to bill date to arrive at my due date. Same with respect to maturity date also. If the bill is a specific date bill and the date is clearly mentioned, that date all by itself is my maturity date. If it is not a specific date bill, the date is not mentioned in the bill, then what do I do? Then maturity date is computed as bill date plus bill period plus 3 grace days. You get that? Now, I have a very beautiful question to you all. Tell me, can due date and maturity date be same? I want a very positive, what is a very active participation in this one. Can due date and maturity date be same? Because lot of times when I ask, no, when I ask what is maturity date, everybody will tell maturity date is due date plus 3 grace days. So will always be 3 grace days gap between due date and maturity date. No, it can't be same, Aditya. Anybody else? Everyone saying no. Okay. I'll tell yes, they can be seen. Due date and maturity date can be seen. Sir, are you kidding? No, I am not kidding. I am not at all kidding. I am not kidding at all. I swear, I mean everything I say. And I'm not wrong. Not at all wrong. You tell me I'm wrong, I'll cut my finger. I'll cut my, what to say, veins if you want. I'm not wrong. Due date and maturity date can be seen. Now you're wondering, sir, how can it be same, sir? I'll tell you, yeah, it can be same. Shall I tell you when? When a bill is issued for a specific date, on the bill I mentioned the date. That date itself is due date, that date itself is maturity date. The same date is due date, the same date is maturity date. Sir, what about 3 grace days? 3 grace days concept will come. 3 grace days concept will come only when you mention a specific period in the bill. Only when you mention a specific period in the bill. Now in the bill, I say I unconditionally order you to pay sum of 10,000 rupees to me after 1 month. It's a specific period, 1 month. Then this 3 grace days will come. Due date plus 3 grace days is maturity date. However, if I write an order saying that I unconditionally order you to pay 10,000 rupees on 10th of December, if I write like that, clearly saying that you would have to pay me on 10th of December, then what would happen? That 10th of December, whatever I mentioned, my phone switched off, so I can't see your chat. So if I've written very clearly that 10th of December, if I've written, then due date is also 10th of December, maturity date is also 10th of December. Due date as well as maturity date will be 10th of December. There is nothing called as difference between maturity date and due date. When it is a specific date bill. If it is a specific date bill, that date only is maturity date, that date only is due date. Did you guys understand little? Yes, it can be same. Did you understand? So when do we add 3 grace days? We add 3 grace days when it is specific period bill. When it is specific period bill. Can I write here? Due date is same as maturity date when? When it is a bill for specific date. You get that? Next, when will we add 3 grace days? 3 grace days added. When will we add? When it is bill for specific period. Are you able to understand the difference here between the specific date and specific period? I hope you could. Then, what if maturity date falls on a holiday? This is a tricky part. What if maturity date falls on a holiday? Tell me. What if maturity date falls on a holiday? Bill of site is like basically the date is mentioned, man. On the bill only they mention the date on which it's basically supposed to be next working day, or we take the previous day. Sukrut says next day. Akshay says previous day. What do we go by? We have to check what holiday is it. Yeah, it is a known holiday. It is a known holiday. It is unforeseen or unknown holiday. It is unforeseen or an unknown holiday. Yeah. If it is a known holiday, then what do we do? Previous day. Because you know, no, that day is holiday. 26th of January is holiday every year. You know it. 15th of August is holiday every year. You know it. So when you know it in prior, what do? The day before that day will become your maturity date. However, if it falls on unforeseen or unknown holiday, then what do we do? Next day, it is not next day, it is next working day. What is it? It is next working day. Now just imagine Now just imagine 10th of April is the maturity date. 10th of December is the maturity date. 10th of December there was a band, there was a strike, nothing is happening. Then what will you do? You'll tell next day. 11th is Sunday. Then what will you do? 11th is Sunday. Sunday is a known holiday. They tell no whenever it falls on a Sunday, the day before. So 10th is band. That is a maturity date. 10th says next day. Next day is 11th. 11th says previous day. Where do we go? 10th says 11th. 11th says 10th. 10th says 11th. 11th says 10th. Can you just be playing around? No. It says next working day. Whenever you work next time. Whenever you work next time. Whenever you work next time, that day will become your maturity date. Did you understand? So it is very important. Very important. See, I can trick you people here and then ask you a lot of questions. I don't have time, so I'm stopping it. If not, I could have tortured you people here, telling 10th of December is the maturity date, but 10th is Sunday. So you'll tell 9th. 9th was Band. Then what will you do? You'll again go to 10th. Then what do we do? See, 10th is the maturity date, but 10th of December is Sunday. 10th of December is Sunday. So what will you do? The day before that, 9th there was Band. So what do we do? Tell no. We should not, a unknown holiday will be given to us in the question. We can't imagine, oh, that day Amrish had died, so there was Band. That day Karnataka Bank people were doing Band. That day there was that Band. That day Vatal Nagaraj had invited Band. You will not imagine Band and unknown holidays. Unknown holidays will be given to us in the question. They will tell there is an unforeseen Band on that day, there is an unforeseen holiday on that day. They will mention to us in the question. Only then the mention will take it. We will not assume unforeseen holidays. You get that? If it's a public holiday, previous day. Okay. We cannot ignore. If it is given, then we would have to take. If it is emergency holiday, it's not succeeding day. That's what I'm trying to tell. It is not succeeding day. It is next working day. Very important. I don't know if I have to mark this in red to make you people understand. Next, whenever you work, I am not telling these statements out of my whims and fancies. I am not telling this out of my own mouth. These are the words which are used in Negotiable Instrument Act 1881. If you want, you can read the act. You will get to know. Yeah, you read it in CA Inter. However, when you come in business laws, the words that is used is next working day. Whenever the next day they work, that day will become the maturity date. However, we would have to do quite a few questions on this also. Sir, what is the maturity date in between a 21 days lockdown? Okay, now assume that the lockdown is starting from March 15th. Lockdown is starting from March 15th. March 15th was your maturity date. Then what will it be? Next working day. Whether it is after 15 days or whether it is after 6 months or after 9 months or after 1 year. It doesn't really matter. You get that? Yeah, next working day. Next working day. Very important. Yeah. So this is little tricky, guys, and you guys would have to remember it the same way. I'm still not done. I'm still not done. There are a lot of things I need to explain. This I've explained. I need to explain these last two. What are the last two? Bill on site and bill on demand. I would have to explain. Yeah, that I'll explain. And the promissory note introduction is over. Then parties involved is also over in promissory note. Then I would have to actually solve questions on this. Yeah, options with the drawer is what I need to discuss. That is there. No, what are the options with the drawer? You can hold it till maturity or discount it with the banker or endorse it. Accounting the books of drawer, drawee, banker, drawer, drawee, endorsee. So I would have to explain it to you. Then I would have to tell what exactly do we mean by retirement, renewal, and accommodation. Once I explain those three topics, I'm good to solve two problems and we'll be done. Maybe in the first hour of tomorrow's session, we'll be finishing bills of exchange. So far today, what we've done is we've done BRS. We finished whatever we had left yesterday. We finished BRS today. We did one question on BRS statement and one question amended cash book we did today. After that, we did entire valuation of inventories. Then we did depreciation may one problem, and now we're doing what to say bills of exchange half done. So tomorrow we'll finish bills of exchange. We'll take the remaining chapters in that special transactions chapter, and we'll try to do one more from final accounts or something. We'll do so that for the last day we'll have something like company accounts, partnership, and NPO. I'll try to keep company accounts, partnership, and NPO for the last day. If in case something else also remains, can't really help. I'll try and do as much as possible tomorrow and keep less for day after. If nothing really works, then we would have to keep company accounts, partnership, NPO, and little bit of something else also for day after. You get that, guys? So I hope it was a good learning experience for you people today. I did really enjoy teaching you people and walking you people through these chapters. But Even I'm not really happy for the fact that I can't hear you people talk. Even I would have loved it to hear you people talk when I'm teaching. I would have loved to hear your answers and then make it a very healthy conversation and something like that. But yes, we were live on YouTube today, so that's how it is, and that's how it will be tomorrow, is what I'm thinking. And thanks for your patient listening. I hope you people did enjoy, and I'm hoping that you people will really study after this class also today and come back tomorrow with a lot of energy for discussing the remaining topics. See you all tomorrow. So till then, remember, life is not a battle to be struggling, it's a game to be enjoyed. Till the time you guys are learning something, you're having fun, it's all good. The day you guys either stop learning something new or stop having fun, trust me, you might start struggling because you might be in a battle. So the thumb rule to stay happy is pretty simple. It is to stay happy. So for one last time on this day, I'm asking this one last question to you people. Are we in the game? I hope the answer is yes, we are in the game. Do study every minute. Every minute counts from now, because number of minutes that we have from now to exam is only in thousands and not in lakhs. So wishing you all the very best, and I'm trying to tell you that you will be included in my prayers for your success in the upcoming examinations. So that's it. Stay in the game. Bye bye. See you tomorrow morning at 8 o'clock.